Good evening, members. Good evening, members. I welcome you for this study circle meeting on the subject Professional Stewardship on Foreign Contribution Regulation Act 2010 and Rules 2011. I am to handle on this an expert and in the profession, C.A. Vittal, sir, is amongst us. I am privileged to introduce him. To start with, I request Chairman Manjunath Allu sir to escort the speaker to the dais and please hand over the floor to him. Let's join our hands together. I request Manjunath sir to also request our second speaker to the dais and offer him a floor. Okay. Dear members, I have a privilege to introduce today's both speakers, Sri Vittal and Sri Arvind Athreya. So first I will go with Vittal sir. Vittal is a CFA, practicing chartered accountant, NGO and international development sector specialist. Sri Vittal Lokare. Am I right, sir? Lokare. A fellow member of the Institute of Chartered Accountants of India, is a seasoned chartered accountant practicing in Bangalore with over 37 years of professional experience. He is a graduate from St. Joseph College of Commerce, Bangalore. His career began with audits for religious institutions and he has since expanded to include a wide range of non-governmental organizations and international donor agencies. He specialized in the audit under Foreign Contribution Regulation Act 2010 with notable clients including Indian Social Institute Bangalore and Kaliki, project of Karnataka, Tata Trust in Karnataka. He has served as an auditor for the liaison offices of prominent international organizations including Basic Needs UK, Every Child UK, Dan Church, Aid and so on. As a financial consultant, he has worked with global recognized organizations such as Christian Aid UK, Bread for the World Germany, Scottish Catholic International Aid Funds, and so on. His international assignments have taken him across Bangladesh, Nepal, Sri Lanka, and Philippines, conducting financial evaluation and audit for various European donor agencies. In addition to his work in the development sector, C.A. Vittal has extensive experience in the banking sectors, including conducting revenue audits, inspection and concurrent audits, and currently serving as a statutory branch auditor for State Bank of Toronto. A committed trainer and educator, he has conducted numerous training programs, workshops and seminars for NGOs, religious institutions and professional firms. As a resource person for the Southern Indian Regional Council of ICI, he has addressed chartered accountants across branches in Bangalore, Vijayawada, Guntur, Trivandrum, Kozhikode on fund accounting and FCRA to the FCRA. He has also contributed insightful articles to the professional publications. With this, we present before you C.A. Vittal sir. I would also like to introduce our second speaker, C.A. Arvind Athreya. He is a Bachelor of Commerce, FCA, CIA, CFA, DISA. Arvind is a partner in Kumar and Raghuvi Chartered Accountants, a firm with a rich experience of 30 years. He has wide-ranging experience in statutory and internal audits, including process audits, investigation and data analytics in manufacturing, trading, agri, commodity and food processing, engineering and service sectors. helping organizations address risks and uncover control gaps. He has been instrumental in designing and implementing the SOPs and MISs, aligning operations, insights, and strategic goals. He has also handled corporate mergers and acquisitions of MSMEs, actively contributing to due diligence, business presentations, and negotiations. In addition, he provides virtual CFO services, enabling businesses to access high-level financial expertise tailored to their needs. He is also currently driving the finance consulting services as the Assistant Vice President at IMG Group in Middle East and Africa. With this brief introduction, we present before you CA Arvind.
Thank you very much, Chairman, Secretary and Office Bearers of the Bangalore branch of CA Institute. So it's a pleasure for me to come here again and speak after maybe 13 years or 14 years. Now, although we are less in number, maybe over a period of time people might join. So we'll start with a small prayer so that we concentrate and get into the technical aspects of this FCI. Because it's a very sensitive act and we need to know really thoroughly well because we are all professionals. We can't do something like what M.Com students do or B.Com students do. And before certifying, even if our students are doing the auditing, before we certify, we have to really give a professional touch. Otherwise, it will go out of order. So maybe I suggest that we will concentrate and have a small prayer and then start. It's a very small act, Foreign Competition Regulation Act, very small act, having acts and rules. Act is like our skeleton, like our, as usual other acts. The rules are like a blood and muscle filling there. So the act starts from top to down, from head to the legs. Once again when you come to the rule, again it starts from head to the legs. That means with blood and muscle. So first we will be covering only the skeleton aspect of it. Then we come to the rules and regulations, then we fill with blood and muscle. It makes a complete thing in that. So when the institute asked me to take class on this, I was just wondering, the FCR Act is as usual regular act and rules, but something has to be tagged there because we are all professionals. So I gave a title Professional Stewardship because we are all chartered accountants. We take things forward. We also educate our clients. We educate their accountants. We also will be alert to do before we certify certain things there. So that's why I gave Professional Stewardship, the title attached, because we got to understand the professional aspect of these things. Many people are doing audits on corporate side, industry side, manufacturing, everything. But since it is a small act dealing with releases and charitable institutions, sometimes we feel it's okay, all charity fellows. They try to ignore, but the real essence and the professional, what I should say, everybody is a professional, but the proficiency of the profession exists or not is tested in this act. We need proficiency of the profession to handle this. We have to develop that. Otherwise it becomes very difficult, so many mistakes, so many wrong things, but now they have amended so much in this. They may start writing letters if there is something wrong, or they may start referring to the institute also for disciplinary action. We don't know how things are taking shape because from last 3-4 years, lot of amendments are coming into this. So before we certify certain things, we need to know ourselves. Although they are all small, sometimes accounting aspects relate to second PUC, 12th standard. Because we study the accounts of non-trading concerns there, and those principles are applicable here. By the time we go to chartered accountancy course and finish, we have forgotten the 12th standard accounts. It's part of the accounts only. Accounts of the non-trading is one of the chapter. But if there is no proficiency of the profession in that chapter, we are bound to make a lot of mistakes. So therefore, before I get into this act, I would like to touch upon this professional stewardship, then fund accounting, and how this international charity happens. So with this background and platform, I will take off with the subject. So now a little introduction. Now we are all chartered accountants. We are different from others. We have to be awake, as chairman was reminding that we have to be awake when others are sleeping. So we cannot sleep. If tsunami is coming, we have to say, please get up, get up, get up, run. If we are also sleeping along those fellows on the seashores, we also will get drowned. So we have to be awake when others are sleeping. So these are the aspects. So what is that professional stewardship? First, the essence. Professional stewardship is a commitment to responsible and ethical management. See, the whole FCI Act is, you take an example of Earth. The whole thing is, you have all the Panchabhutas, no, like this. It is profession's commitment to responsible and ethical management. While doing our job, discharging our function, we have to be following ethical values also. Not that because these people are in rural development, rural management and all, we cannot compromise ourselves and just go out of the way and certify. We have to be ethical. Anyway, this man is getting free money, for charity money, 2 crores, 5 crores, let me also take some extra money, although your work is very small. No, we should not get tempted with the money. So we have to be more ethical in discharging our attesting responsibility. So professional steward is a commitment to responsible and ethical management, focused on the long-term well-being of what has been entrusted to one's care and contributing to the greater good. So this is the auditor's responsibility when it comes to the compliance of this act and rules. What is that emphasis? It emphasizes accountability. What is accountability? External honesty. You know what is the meaning of honest. Where is the honest? Honest is inside. But when this inside honest comes outside, that external honesty is accountability. Whatever we are, as a honest members, should be shown on the records. When somebody should be able to see, then he say he is a honest. That is, so external honesty is accountability. It emphasizes accountability. Ethical conduct. In code of conduct in the institute, we have compared the services of a chartered accountant to ecclesiastical. That means one who does puja, whether it is a Mauli or a priest or a Swamiji. How holy it is his work, no? That much holy is auditor's work. That's what the starting sentence of the code of conduct of the institute says. Ecclesiastical, that word is ecclesiastical word is used there. You have to remember that within inverted commas. Accountability, ethical conduct and commitment. Once you have taken the responsibility, whether it is a small or a big, we have to be committed. We have to do our job properly, correctly, and we have to be alert while doing it. So this is what revolves around our Foreign Contribution Regulation Act and the rules. Now, this act and rules applies to charity funding. See, you all know, most of us have read the economics, no? In that foreign trade is one of the chapters. What happens in foreign trade? Imports happen, exports happen, all these kind of things go on. So when we import the goods, our money goes out. When we export the goods, money comes in. So there is a principle of quid pro quo. Something comes in, something goes out. Right? So it is a trade transaction. No, trade transactions of import and exports are regulated under Foreign Exchange Management Act, FEMA, where RBI is called controllerate. But parallel to it, there is one more aspect. That is a charity. That means one way. The principle of quid pro quo exists in foreign trade, import export, but the quid pro quo principle is not there in charity. It is only one-sided, unilateral. Money comes in, but nothing goes out. It comes as a charity. But such charity money used properly for the development aspect, for betterment of the people's lives, or for whatever it is money has come, that is fine. But if that goes against and tears the fabrics of the democracy, then danger. And such monies, foreign contributions, can be misused to tear the fabrics of the democracy. So that's why for that foreign contribution, RBI is not interested. It is Government of India directly controls through Home Ministry. So Home Ministry is responsible for Foreign Contribution Regulation Act. Within Home Ministry, one FCRA wing is created and they monitor and supervise. So that job is not given to RBI. For RBI only import export. You bring out your exchange control manual, you do the things and you regulate. You manage. FEMA, only that. But when it comes to Foreign Contribution Regulation Act, Home Ministry is responsible to implement this act and supervise Foreign Contribution Regulation. That's why in the bracket they said regulation, Foreign Contribution Regulation Act. That means this revolves around, because it is a unilateral money coming inside, most of the things for charity, you should know how the mechanism works, how the international charity functions. I will explain these things. First, I will show you a diagram. See, international charity flow. There are donors and benefactors here abroad. They contribute money to the international non-profit organization. From international non-profit organization, it comes to local Indian non-profit organization. From here, it goes to the people. That means people's money coming to people. People's money maybe from Europe or some other country, they come to India, Indian beneficiaries are here. And there will be an agreement between international non-profit organization or international charity and Indian non-profit organization, charity. So these two will be having an agreement. So Indian NPO will give a small budget to international NPO, international NPO will collect the monies and they give to these people. From here the project is implemented. That's how the whole scenario works. Now the agreement between these international NPO and local NPO itself is a document which shows that money should be spent for what? There will be a budget attached there. So money coming here should be spent according to the budgeted amount. So as an auditor, when we go to do first audit, you should ask for the papers, where is the agreement between the resource agency, the donor agency is called resource agency, and implementing agency. So as an auditor, we are doing implementing agencies audit of foreign contribution funds. So we should ask first, where is the agreement and where is the budget? That's the first step. Then you will know what are the programs they are having. Either some people may be women prisoners rehabilitation, or it may be women and child program, it may be health program, it may be so many other things are there. So as an auditor, first job is to see the agreement. Once it is an agreement and all the money that you get it, you are receiving as a trustee. You are only as a post office, it is not your money. So it becomes a trust fund. So you are receiving as a trustee and you are implementing. It is not your income, not your expenditure. You are only acting as a post office. You cannot say all the money is mine. No, it is not your money. Donors are giving under an agreement. You receive, you are only custodian of that money for implementation. You are only implementing. So this NGO, which is coming under FCRA, is implementing agency and it is only acting as a post office. It is not their income, not their expenditure. It is a receipt, it is a payment. But any unspent money will go to the balance sheet as a liability. You cannot transfer excess income or expenditure transfer to general fund. It can never be your own money. So please make a distinction between general fund and undisbursed funds. So that's very important. So that's why I just put this diagram to understand the very foundation of the foreign contribution. This is the structure under which money flows. And I have also given something here. It is good to understand. In case of a good and standard developmental organization who are dealing with foreign resource agencies, that is international agencies, or state or central government agencies for implementation projects, normally they have an agreement and administrative guidelines as part of the agreement. The approved budget will also be part of this project agreement. The agreement contains certain clauses whereby resource agency agrees on certain points. Similarly, the implementing agency also agrees on certain points. Other points on which both agree. Among others, there will be a clause in the agreement that the implementing agency will apply funds for the purpose for which it is given. If any balance left will be returned to the resource agency or to such agency as desired by it at the end of the project. Further, any interest earned on such funds will be put back once again for the similar objects for which the project is approved. That means the calf will go along with the cow. You cannot say you give me calf, I have spent the calf is mine, no such things. Everything has to go there. All these constitute a document in hands implementing agencies to prove that these constitute trust funds or specific funds and will not constitute income. They become capital receipt as they are received under an obligation. The purpose of spending is pre-decided and is diverted at source. The implementing agency has no discretion to spend as per its wishes. They constitute evidence or proof that they are capital receipts and getting covered under 11(1)(d) of the Income Tax Act, hence not treated as income. This much be kept in mind while starting the audit. Now, when you go for such audit, which are under foreign contribution regulations, you must try to understand what is the design of the bookkeeping they have kept there. That's very important. Design of bookkeeping is very important because if there are 4 donors, let's say from Europe, different countries, for different purposes, and you have made an agreement and those monies have come to you. Now you have to report each agency separately, how much amount is received, how much is spent, and what's the balance left out of each agency, because these constitute trust funds in your hand. So what kind of book, you cannot simply mix up everything. So you have to have separate set of books of accounts, which will be automatically there in the act also. But first I am sharing the design, afterwards we will enter the act and rules and regulations. This will help you to understand those concepts better. So what is the kind of bookkeeping system? Now let's say offer is an organization. They are receiving money from 4 donor agencies. Now as per Foreign Contribution Act, you will get further, but I am just explaining the diagram now for bookkeeping system. Money is coming, left side is foreign contribution, right side is local section money. Left side foreign contribution section, first amount will arrive at SBI Delhi. From there you get to another FCR bank account, what was earlier your designated bank account. So there is a main cash book, main ledger. From there, each donor's money will go to another one. Utilization A, B, C, D. So you can have separate bank accounts there, and each donor's money will go there, and you maintain separate set of books of accounts, cash book, ledger, voucher file, bank account. So under each one. So each agency, when they ask you what's the balance left out, you can give details from each one. So this is the design. It is like a dam constructed across the river. All the money is coming, standing at the back as a backwater. You have to release, remove the slices, gates, one by one, and put it into the canal system, and it should go. It should not get mixed up. Otherwise it will get flooded. You will not be able to do the auditing. First you should know the design of the bookkeeping, how they are keeping all the things. Try to understand. Then start the auditing. Without this knowledge, if you start, you will also get drowned along with the water. We have to be very, very careful. So, if they have not kept the design on bookkeeping properly, guide them. Make them do properly. That's the auditor's job, because we cannot accept the accountant there, whether he's a BCom or MCom or with years of experience, whatever it is. He may not be aware of the requirements of the act, but he would have maintained in his own way. But first time when you enter as an auditor to do such audits, you have to understand the design of bookkeeping, how he has done, and how many donors are there, what is there, read the agreement. Then see whether it is done or not. If it is not there, if it is mixed up, for you to certify and reporting will be complicated, you might mess up and you might end up in difficulties or problems rather than the institution which is later than you. So you try to understand the design. So we will come back to this again afterwards. Now I will explain, and this is nothing but our sectional books of accounts. Separate sections for each one. So this is how it goes. So it is like a overhead tank. From overhead tank you send it to small tanks, and from there you monitor. So with this little background, we will try to enter into Foreign Contribution Regulation Act. First, this act came into existence in 1976. It was only one-page reporting. Just fill it up and post it to Home Ministry. Then, 1984, so many political changes also happened in India. So there they felt necessary to have this act amended to strengthen the things. So in 1984, major amendments came to this act. 1984. Monetize my daughter. It starts now with what I gave in the introduction. You have a trade and a charity, two sides. In the trade, because of export and import, you have currency coming in, goods going out, or goods coming in, currency going out, it becomes a trade. There is a principle of quid pro quo. What's the meaning of quid pro quo? Something for something. To control such trading transactions, RBI Mumbai controls and monitors through Foreign Exchange Management Act, what we call FEMA. Now come this side, charity side. It is one-way traffic. Flow is only one side. No quid pro quo principle. One-sided, unilateral and gratuitous transaction. To regulate such charity transactions, Ministry of Commerce, New Delhi, bracket FC section, regulates and supervises through Foreign Corruption Regulation Act. Please note that changes. RBI controls and monitors. But in FCRA, regulating and supervising. See the change. RBI cannot say don't do this business. They can only say you do this way. You fill up this form, that form. You refer to the manual. So they can only give guidelines to you to say, but they cannot say don't do this business. No. Therefore, it can only control and monitor. But come to the FCRA, regulating, supervising. Home Ministry supervises foreign contributions through CBI. And then regulates. They have a power to say no, don't receive. So regulating is here. That's why Foreign Contribution Bracket Regulation Act. See the difference in the words. Now, if you read the objects, it's very simple. The object is to regulate any activities detrimental to the national interest. What is the national interest? I told you, the democratic fabric should not be torn. Your activity should be safe. Detrimental to the national interest, matters connected therewith or incidental thereto. So it is not only direct, indirect also is covered. So the Act came into existence in 1976. They also got rules and regulations. This Act got amended from time to time and major changes took place in December 1984. FCR Act 1976 was abolished and new Act called FCR Act 2010 is brought into existence. Act they made, but Parliament did not give assent because rules were not ready. Rules got ready only in 2011, so both became effective from 11. The new Act is called FCR Act 2010, came in force with effect from 1st May 2011. This also got connected with the rules called Foreign Contribution Rules 2011 to explain the procedural aspects involved. It is just like an overview. When you go to railway station, you see the train. How many bogies are there? Like starting 2 general bogies, then you have AC compartment, then you have sleeper compartments, then again 2 general, then guard, train. So that if you see the Act from top, how many chapters are there, what it is, so you have bird's eye view here. Chapter 1 deals with the title and definition. Chapter 2, regulation of foreign contribution, foreign hospitality. Because this Act deals about foreign hospitality also. What is foreign hospitality? These IAS officers, IPS and all, when they go abroad, when they get all the facilities there by that government, when they come back, they would submit to Home Ministry on certain form and other things. So such things also are covered under this Act. But it has nothing to do with us. We don't do such audits. Nothing to do with us. So foreign hospitality is removed. There are some attacking political parties. So we are not concerned about political parties, we keep apart. So we are interested in knowing what affects the religious and charitable institutions. So in all our things, it is religious and charitable. Regulation of foreign contribution and foreign hospitality, then registration section, chapter 3, chapter 4, accounts, intimation, audit, disposal of assets, chapter 5, inspection, search and seizures, chapter 6, adjudication, confiscation, articles, currency, security procedures, appeals and revisions, then Chapter 8 offences penalties, then miscellaneous. Calling for information, investigation, delegation of power, power to make rules, power to remove difficulties, repeals and stayings. Because once Act has come out, tomorrow some new situation comes up. They want to do some amendments, they can't run to Parliament again. So they themselves are kept under miscellaneous powers to make rules. The Home Ministry, they themselves can make rules and regulations under this one. They have retained that power. And any clarifications they want to give, they can give for the difficulties. They are calling for information, investigation also they can do. All these things are all under miscellaneous. Now coming to Foreign Regulation Act, we finished the overview, we enter there. You remove political parties, you remove foreign hospitality. What affects the religious and charitable administration is straight away Chapter 2, Section 7. From there on, we have here only those sections and rules which are affecting us, that is religious and charitable institutions. Other things are excluded in this. We straight away start with Section 7. It says, FC can be received only if it is registered and granted a certificate. Foreign contribution cannot be received by any Tom, Dick and Harry unless they are registered with Home Ministry, and unless Home Ministry has granted them the certificate. Only if these two conditions are satisfied, they are eligible to get foreign contributions. That auditor should know. So when you go for audit, call for that letter. Where is the registration with Home Ministry? Show me. You have to see this document because it's a part of the audit process. We cannot simply bypass this only, because sometimes there will be restrictions while giving permission. They write at the end, you shall not receive any money contribution from the foreign donors 1, 2, 3, 4. That means they are all blacklisted because their incoming of money would have been misused here. When Home Ministry through CBI they have come to know, they would have banned these fellows, and while giving you permission, they will write very clearly at the end, do not receive this money foreign from these agencies. So you should, only when you ask for the letter, you will know. Suppose you, in spite of the registration, in spite of the condition put, if he has received, what will be the auditor's responsibility? You have to say, foreign contribution is received in contravention of the Act and rules and permission, because they are clearly prohibited. So if you don't see the letter, you will go and certify the FC4. So please ask for the registration letter first. As an auditor, when you go there to do this kind of audits. A person who is registered and granted a certificate, that is a regular connection, or has obtained prior connection and receives foreign contribution, shall not transfer such foreign contribution to any other person. There are two things, regular permission and prior permission, which will come in the front. I will skip because it is going to come again there. But passing reference, prior permission means only for that limited amount, for the limited period, you want to receive foreign contribution to implement certain programs. So that time, your donor will give a letter, I will support you 3 years with this much of money to work in this field for this purpose, programs. So that letter along with the application you should send to Home Ministry, they will give permission which is valid only for that amount, that period. That is called prior permission. After 2-3 prior permissions, if they are satisfied, they will grant you regular permission. Regular means you don't have to run to them every time. It is there for you. But now they have made 5 years it's valid, afterwards you have to reapply. So regular permissions you don't have to run every time. Clear? So that is general permission. Now, shall not transfer any such here. Once you have received foreign contribution, you are supposed to implement yourself. You cannot give to somebody else to implement. Earlier that system was there. You could receive big amount, give to Chota 5 NGOs, try to implement. They also submit details to Home Ministry. They also submit. There was no system contract the central government and Home Ministry. So they could not give to the Parliament total amount of foreign contributions coming in India because everybody was submitting. So what they made was, they said shall not transfer. You have received only you, and you receive only from Delhi branch, so that they know how much inflow of foreign countries have come in India. Shall not transfer. So while auditing, if you come to know that these fellows have transferred somewhere, you have to be careful. this point, see these are the points an auditor should be alert and look into it. No transfer. Section 8. This section directs that FC resource should be utilized for the purpose for which such FC is received. That means no misapplication, no diversion. You can say, no, there is no fraud, fine. But money received for women prisoners program for their rehabilitation should not be used for fire victims relief fund. Somewhere earthquake has happened, this money taking another, no misapplication, no diversion. So for what it has come, it has to be used only for that. You are allowed to do some administration cost because when you are implementing the project, these NGOs, they spend on traveling, they spend on salaries, printing, stationery, postage, or some kind of administrative. Earlier the Act had given 50% of the money is the limit for administration, but now they have realized it's too much, so they have made it as 20%. So out of your money, only 20% you can use it on administration. New section 8 of the FCR Act amended now prescribes 20% instead of 50%. However, the exceptions contained in this continues. There are certain exceptions which we will be getting into. Section 11 says the existing registered organizations, that means 2010 rules 11 became effective on 1st May 2011. So what about those rules who are registered earlier? So they automatically get into this, like in our charter procedure, all the GDS were converted into members of the institute. When the institute started, there were already charters called GDA, Government Development Accounts or somewhere, which British government was doing. So they all were converted into charter names. They were allotted numbers. That's how the institute, when it started the GDA group. And later on, members started passing the CA exam and they started becoming members there. So like that, here also they said, those who are registered prior to 2010 will automatically get into this new act. You don't have to apply once again. That's what they said. The existing registered organizations get automatically covered under the new act insofar as registration is concerned. The registration is valid for 5 years only. And the existing fellows, from the time Act started, 5 years for them to be calculated. Otherwise, for the new fellows, from the date of registration, 5 years. If FC is received by unregistered bodies, that means you are not registered with Home Ministry. This is what it means. If you are not registered with Home Ministry bodies, then if you receive any foreign contribution, the effect is the unutilized or unreceived amount cannot be utilized or received without prior approval of the government. That means your friend or one donor in civil straight away sent to your bank account, let's say 20 lakhs for charity. Now if you have received 20 lakhs already without your registration with Home Ministry, you are not supposed to spend it. Supposing your friend is willing to spend another 20 lakhs which you know in advance, then you tell him not to send. The unutilized or unreceived amount cannot be utilized or received without prior approval. That means to spend this amount or to get that another installment, you need central government's permission, that is FCR registration required. Only then you can proceed. Until then, the amount will be lying in the bank home as it is. You are not supposed to draw on it. When applied for registration, the central government may ordinarily register and grant certificate within 90 days. They say it is 90 days, but it is taking a little more time because the moment your application goes, they send it to CBA for inquiry. The local CBA fellows will come and make inquiry with all the governing body members. They will go to the field, what kind of program, what is your credibility, everything they look into it, then submit the report. Only after getting the report, you will get the registration. Not only that, the CBA fellows when they come, they will also see the credentials of the auditor who is doing this, where he moves, with whom he moves in the evening, where all he goes, what are his contacts, all that also they inquire. So these Home Ministry fellows, they know one who is doing FCR audit, no? Their whole jatakas they know. So when applied for license, the central government may organize registered grant certificate. The registration is valid for 5 years. Prior permission will be valid for the specific purpose, specific amount of FC proposed to be received. Every person who makes an application shall be required to open FCR account in the manner specified. The central government through notification dated 7th October 2020 specified State Bank of India New Delhi main branch located on 11 Sansad Marg, New Delhi as the branch for the purpose. That means all international passengers should first land in Delhi, then only take a local flight and go anywhere in India. So this is how it looks like. Earlier everybody was getting directly, but now everything should land there because whenever government wants information, this branch is next to the parliament. They go and take the information, answer in the parliament whenever any question comes. New section 12A. The Aadhaar number of all the office bearers and directors or key functionaries shall be provided. Earlier these things were not there. Now all these things are come. Prior permission, regular permission, registration or renewal cases. In all the things, Aadhaar number is a must. All these changes will come because some problems would have come up. People are not able to be identified. Some kind of a glut happened where government cannot control. So they bring all these kind of things. Then cancellation of certificate. You are already enjoying registration, either prior permission, regular permission. Under what circumstances it can get cancelled? 1. After making an enquiry, the central government may cancel the certificate if making incorrect or false statement. That means while giving application, you are not filled properly, incomplete or false information. Violated any terms and conditions of certificate or renewal. I told you, when approved, at the down they would have written, please do not receive the funds from these agencies. If you have violated, you still receive. This is what it says. Violated any terms and conditions of the certificate or renewal. Necessary in the public interest. Sometimes your programs must have sparked and made some big noise, which is not good in the national interest. So that time also Home Ministry can cancel the number. Has violated any provisions of the Act or rules or order made. That means they say once in a year you submit within 9 months. That means before 31st December, your annual details in FC4 should go to Home Ministry. Supposing you have not done that. That is a violation. Violated any provisions of the Act. And not being engaged in any reasonable activities in its chosen field for the benefit of the society for 2 consecutive years or has become legal. That means you have never visited the field. Simply you have received a foreign contribution, you are not gone there. Or before getting foreign contribution also you are never in the field to implement program. That means you don't have roots at field level to do any kind of programs and simply you try to get foreign contributions. No. So when the inquiry comes from CBI, they will go to the field and see whether your name is known, public is known, people whether they are aware about you or not. All such things they will inquire. If they come to know that you are not in the field, more than 2 years they have taken the time. Nothing. They will cancel the number. Another one, defunct. After getting number, for certain reason your society's registration is cancelled. Because some 10 years, 12 years you have not filed your annual returns to the registrar at all. Registrar cancels. Organization becomes defunct. Then automatically FCR also gets cancelled. If certificate is cancelled, not eligible for registration or prior permission for 3 years from the date of cancellation, once you lose the certificate, you have to go compulsorily a holiday period. That means for 3 years you are not eligible to apply again and take the permission. You can't go. Now, new section has been inserted 14A, surrender of certificate. Supposing on your own you want to surrender the certificate, FCR certificate, then what happens? When a person surrenders the certificate, the government may permit if after making such inquiry as it deems it, they will make an inquiry, simply they will not accept the cancellation. They will make an inquiry why this one is cancelling. it is satisfied that no contravention of any provisions of the Act. That means they should be satisfied that you are not contravening any provisions of the Act. Management of funds and assets, if created out of FC funds, has been vested in the authority as per section 50. At the meantime, before you surrender the certificate or cancel the certificate, if you acquire some properties like training programs, training sheds, training center, you have constructed a building, you have purchased on land, you have constructed on building to hold the meetings or programs of your beneficiaries. And such properties which is acquired out of foreign contribution, they will be vested with government. This came along with the amendments that said you have to have one bank account in Delhi. That time everybody was busy in going to Delhi and opening an account. No NGO made a noise for this. Now they are getting alerted. Surrendering is also getting equated to cancelling. Either Home Ministry can cancel, or if you want to say about surrendering, both are equal and these provisions will apply. Renewal of certificate, because 5 years it is. Once it is granted, 5 years. After 5 years you have to go once again for renewal. That time they have put certain things here. Person who has been granted a certificate shall have such certificate renewed within 6 months before the expiry of the period of the certificate. In other words, apply for renewal after 4.5 years. That means 5 years is your period. 6 months before you are supposed to apply. That means after 4.5 years you have to apply. The central government will renew certificate within 90 days. Ordinarily, that is an extra word, from the date of receipt of application for renewal. But they will make an inquiry. Inquiry before renewing. There are so many cases which they have contacted personally over the phone because their mobile number was compulsory. Some people said, we do not know whether we are members because these fellows from the head office, they put some names and they are submitted. When the renewal came and they contacted all these members, 2-3 members said, I do not know. Then they did not renew. They said, no, people have refused. They have simply put information which is not correct. It has happened in many Catholic institutions also, many nuns and all. They were unaware of these rules and regulations. Sometimes they were not knowing, their superiors, they have put their names and sent. They said, I do not know. Their number got cancelled, they did not get renewed. Things have happened, quite many have happened. Inquiry before renewing. Subsection 1 is inserted under section 16. This empowers central government may inquire as it deems fit to satisfy itself before renewing the certificate that such person has fulfilled all conditions specified in subsection 4 of section 12 for grant of certificate of registration. That means papers submitted by you, they are in order. That's what they are. Then, regarding accounts and audit. Section 17, earlier it was there, they removed the whole section, rewrote and made a separate one. FC should be received only in an account designated as FCR account. Presently, SBI main branch, Sunset Mark, New Delhi. They may also open another FCR account in any scheduled bank of his choice for the purpose of keeping or utilizing the FC which has been received from his FCR account in the specific branch of SBI, New Delhi. He may also transfer for utilizing to utilization accounts. I told you sectional books of accounts in the design. Okay, from there over a tank you can transfer to sub-tanks. No funds other than FC shall be received or deposited in any such accounts. That means this FC section is like a broad gauge, local is like a mid gauge. No local money should go into FC section. That means no train from mid gauge should run on broad gauge. It cannot. So you may have two separate sections of books of accounts. This is very important when you go forward. First, when you go there, FCI means separate books of accounts are maintained or not. That's the first primary. Then afterwards you see section books of accounts are maintained or not. That becomes easy. No funds other than FC shall be received or deposited in any such account. Just a glance through pass sheet. There you will know whether any local money has gone into it. Then bank also has given some responsibility. Banks to report to the such authority
that is amount of FC, the source manner and remittance received, other particulars in such form and manner as may be prescribed. If you go for bank audit, quietly ask the manager, do you have separate file for FC? That fellow will bring. Then you see what is he reporting to Home Ministry. You can get all the things. But there is nothing serious about it. Routine details they have asked. So these people have to report. I have put that through diagrammatic form, section 17, designated as FCR account. State Bank of India, Sunset Mark, New Delhi is FC landing account. First paragraph, section 17. Then another FCR bank account, that is your old FCR account. Earlier old designated bank account for the purpose of keeping or utilizing money. Then from there over time you can transfer to utilization account 1, 2, 3, 4 different donors money. Second paragraph, third paragraph. Provided also that no funds other than foreign contributions should be received or deposited in any such accounts. That is, no local money to be deposited in any account. This is a new system created through substitution of the new words in section 17 with effect from 29/9/2020. Now, information, how to submit information to Home Ministry. To inform Home Ministry in FC4 form. As the amount of FC received, sources, manner, FC received and the purpose for which it was received. Those who receive FC money shall also submit a copy of the bank statement which indicates FC receipts duly certified by the bank officer. That means you are signing FC4 a certificate. Along with that, there should be bank account, FC bank account, Delhi and location. No? You have to get a copy from the branch. You would ask your client to get, and it should be duly signed by the office of the bank. Such things should be attached and sent. So when you submit your FC4, bank statement also should be scanned and sent along with that. Duly certified bank officer along with form FC4. Chapter 4, Books of Accounts. Those who receive FC account shall maintain an FC account received and a record as to the manner in which such contribution has been utilized. That means whatever it is from bookkeeping. Audit by government. When you are defaulted, these people will land on you to check whether things are alright or not, whether something has gone wrong, you are not able to submit. So to make an inquiry, they have retained the powers to land. How they can land and what they can do, what they cannot do is now here. The central government may authorize gazetted officer of Group A rank under central government to audit any books of accounts of such person. Such officer has the right to enter in or upon any premises at any reasonable hour before sunset and after sunrise for the purpose of auditing the said books of accounts. You have seen Mahabharata Yuddham. They all come, do fighting, then sunset, they go back to their camps. Again in the morning, in the night they all become friends, they go, who has died, who has not died, what happened, everything they repeat it. Again when sunrise comes, again they go and start fighting. So here also Home Ministry fellows can come to you after sunrise, but before sunset. They cannot come to your premises the night and ask for the books and start checking. Exactly. You have to remember Mahabharata here. For the purpose of auditing the said books of accounts. In the foreign circumstances, when these foreign circumstances are there, that time they can land. When failed to furnish any intimation within the time specified, say 31st December is the time to submit Home Ministry. See, your accounting year is over on 31st March, they have given 9 months time. Even after that, if you are not submitted, then they will start thinking what is happening to the foreign receipt, why they are not submitting, what are the special circumstances that is creating them not to submit, why to delay. So if they get suspicious, they can land. If you are not done reporting in time. Intimation so furnished is not in accordance with law. That means you are not followed law properly, but you have done something, you have filled and sent it, no? No. Then also they can land. Any provisions of FCA Act has been contravened. That means in the whole act, whatever we have read now, if any contravention is there anywhere, they can land. They have written you don't receive from this donor, but even after that you have received. Then they want to come and see. Earlier we have this history. Therefore you have banned them. Again he has received. What's happening here? They can come there and see. Any provisions of FCA Act should be contravened. Disposal of FCA assets, very important. If the organization ceases to exist or if it has become a defunct, then all the assets shall be disposed of according to the law in which it was created. If you are a society, according to Societies Act, you have to dissolve. If it is a trust, Trust Act. If it is a company, Companies Act. If no law exists, that means you are simply come into existence as an institution. What is the meaning of institution? There is no father and mother. That means there are no documents. There is no memorandum and bylaws. There is no trust deed. There is no memorandum or articles of association. When these things happen, no, it is called institution. When no formation documents are there, it is called institution. Tudors law, London book. There it is. See. If no law exists, then the central government may by notification specify all such assets shall be disposed of by such authority in such manner and procedure as may prescribed. See, this is the power retained by the Home Ministry people. They have power by notification specify all such assets shall be disposed of by such authority in such manner and procedure as may. If they want, they can take it and use it for municipality or anything, because these are all not earned by you. These are donated assets. So government has the right to take donated assets. Do you know any institution here in Bangalore where it exists with no laws? It is not registered as a trust, not registered as a company, not registered as a society. Have you come across any such institution? Anybody here? Sir? There is a Clarence school there. Fraser Town Clarence school? It is not registered under any act because the school was started by East India Company fellows. They allotted some land and to educate the children of East India Company who came from London now to study the children in the background of their religion, that is Protestant, and the Anglican culture, that is London, because these officials when they go back to London, these children should get integrated easily into that society. If they are into different, when they go there they find it difficult. So to educate them in the background of their religious life and standards and culture, this place is registered for education institution where East Indian Company officials' children are educated. So there is a document which East India Company has put a seal and given them. So they are surveying on that seal. Not a trust, not a society, not a company, but it came to existence because I had a chance to see the document, East India Company seal of office. I have seen such East India Company official documents in Bangladesh also. They are called Church of England. They were under Church of England. They are called Anglican churches. So when India was divided and they are going, all their properties for South India they made Church of South India, Church of North India, Church of East Pakistan, Church of West Pakistan. Then Church of East Pakistan became Church of Bangladesh. So that's how it was. And through that they managed the whole Protestant churches, that is CSI. Because different denominations got merged. So with those kind of structures, they are in all over India, in different places. They are institutions. 12A is applicable because income tax has given them the 12A number when they have shown these documents. Similarly, the Home Ministry also has given them the permission to receive foreign contributions. So this is very unique. That's why they said, if no law exists, that is the significance. If no law exists, then the central government may by notification specify all such assets shall be disposed of by such authority in such manner as prescribed. Clear? Now, this is the skeleton from top to down. Foreign Contribution Act ends. Now we have to go with rules and regulations. But since you have understood the skeleton, now it's only blood and muscle. I will try to go fast because I have to finish by 6:30. Next session starts. So I will use the 15 minutes, after 5 minutes any doubts. And this, if anybody wants notes, they can take from my institute. It's available on pen drive. Please keep it. This will be useful guide for the audit. Foreign consumption rules. There's the blood and muscle now we are getting. This has got amendments up to April, May 2025 also, because recently 2 amendments came on administration expenses, and also FC4, which auditor signs, got enlarged again. So up to there, the amendments are into this. These rules prescribe procedures to be followed. Rule 1 and 2 give short title commencement. 2-3 deals about guidelines for clearing an arbitration to be of binding nature. Rule 4 defines what is the speculative activities. Here important. Speculative activities are banned under FCR. Speculative activities, simple. Like when you go to mutual funds, because it depends on market forces, where fluctuation happens. So once you get foreign money for charity, you go to mutual funds. If it varies, the charity money will lose its value. Once the value has come down, if you have lost 2-3 lakhs, that much of donation which is meant for benefits is lost, evaporated. So they said no FC amount should go into speculative activities. So you have to be very careful when you do auditing. At the end, ask for all the FDs made, investments made under FC Act, because sometimes there is a lot of surplus. These fellows who have kept it in bank FD. Some people without knowledge of this, they will go into mutual fund, because these agents, they will come and influence them. So these people will go into mutual funds. So there is a violation. As an auditor, you should be alert. You please see, you have so many things under investments. Show me all the things. So you take a list and tick one by one, do physical verification. If there is anything in mutual fund, and if you don't comment, don't write, then gone case. Because you are certain something as correct, what is not correct. And when it is enlarged, FC4, they have asked, while conducting auditing, whether you have done these things, tuck, 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 you have to say yes, no, yes, no, yes, no, yes, no. There it is, one of the point is, whether any funds are invested in speculative activities. Be careful. This is a big bomb. Sometimes these management fellows who are running NGOs for foreign consumption, they will be having limited knowledge. But inside masala, there is a prohibition, there is a restrictions they are not doing. Very important is always restrictions and exemptions. You should be very careful. If these two things are lost, our professional competency goes. Because ordinary things even MCOM fellows or ordinary fellows also will do. But the proficiency of the profession exists in knowing what are the exemptions, what are the exceptions, what is prohibited. These are the 3 things we should be thorough. When clients come to ask, we should be immediately able to tell, no, this is not correct. No, you do this way. Otherwise, they also miss, we also miss, and we end up in wrong certifications. You know the difference between a report and certificate, no? Certificate is only fact. Auditor has no discretion to use his opinion, professional opinion. Certificate is equal to fact. Report is fact plus opinion. Only when fact plus opinion is there, it becomes a report. So auditor's report, auditor will comment on the facts. I have conducted the audit of this organization, so much so that I have gone through the books of accounts, all the things, everything, fact. Then says, in my opinion, only when in my opinion is there, it becomes a report. Because auditor will use professional opinion with his background and education qualification and knowledge. But Home Ministry doesn't want a report. He wants only facts to mention. That's why FC4 is called certificate to be given by chartered accountant. It is very strong, very, very strong. We have to be very, very careful. They are listed here. What are the administrative expenses? That I will skip because we have to finish in time. All assurers and legal professional charges, rent of premises, all these kind of things. Then there are certain exceptions in administrative exceptions. This is important, this you should know. Because as a professional man, you should be able to guide the client. If an association where foreign contributions come, where you are auditing, if they are involved in research and training, then salaries and remuneration of the person engaged in training to be ignored. Salaries and remuneration of the person engaged in collection of data to be included. Salaries of remuneration of the person engaged in analysis of field data. Such people's salaries to be ignored to arrive at 20%. Exception. If an organization's objectives are welfare oriented, like salaries of the doctors in hospitals, salaries of teachers in schools, such things to be ignored while calculating 20%. They are all exceptions. If you don't know this, after seeing a hospital which is getting foreign contributions, you say, oh, all these things are happening, you have crossed 20%. No, to be ignored. Very important. Section Rule 6 deals about receiving FC money from relatives. Now, recently there was this amendment also was there. If any person receives FC money in excess of Rs 10 lakhs in a financial year from any of their relatives, you shall inform the central government, inform FC for 3 months. That means up to 10 lakhs, you can receive money for charity in your name as an individual. The whole act is about charity. If I am constructing a house, I am asking my sister from USA to send 40 lakhs rupees because it has fallen short. If she sends 40 lakhs through banking channel, it is under FEMA. Because she is not giving me 40 lakhs for doing charity here, for constructing a house. But if somebody gives me money for charity work, then I can receive only up to 10 lakhs. But if it crosses, then I have to inform Home Ministry, inform FCO within 3 months. See, these are the little delicate things. When you conduct a surgery, you have to attach proper nerves there. If you attach ultra-pulta nerves, so these are all required for attaching correct nerves and analyzing correctly and guiding them and doing our job properly. That's why it's a professional stewardship. Rule 9 deals about registration of prior permission to receive foreign contribution. Make application, register these procedures, blood and muscle asset. For FC3A, prior permission in form FC3B in electronic form, followed by uploading of the signed or digitally signed application along with scanned documents specified in the central government. Hard copy to reach central government within 30 days of online submission. Many do online submission, but they forget to send hard copy because after sending online, they have to download and post it. This second part they don't do, but they will be waiting 6 months or 8 months or we are not receiving anything. Because they say failing which request seekers. Only online means no, request seekers. Online followed by hard copy. Many people don't read this. This is important. When they come and tell you, the client, sir, I am doing all the things, but 9 months or nothing I have received all this. You have to ask, after sending, did you do this hard copy posting or not? That's important. Hard copy to reach to central government within 30 days. Now, a person seeking registration under clause H of subsection A of section 12 that shall meet the following conditions. It shall be in existence for 3 years. That means if I am applying for prior permission, regular permission, I should be working in the field for the public and I should be there for more than 3 years. I shall be in existence for 3 years. That is minimum 3 years. And have spent a minimum of 15 lakhs on its core activities for the benefit of the society during the last 3 financial years. So much of money should have been spent on the development program. Otherwise not qualified. So there are some other things. A person seeking prior permission shall meet the following criteria. Submit a specific commitment letter from the donor. If common members exist for Indian organizations and foreign donors, it should satisfy the following conditions. Here, the chief function of Indian organization should not be a part of the foreign donor organization. So these are all conflict of interest. 70% of the office bearers of the members of the government body shall not be members or employees of the foreign donor organization. If the foreign donor organization being a single individual and that individual should not be the chief functionary of the Indian recipient organization. In case of a single foreign donor, 75% of the office bearers are members of the governing body of the recipient, or it should not be the family members or close relatives of the donor. So usually what used to happen is these folks when they are abroad, they used to follow their own society, their trust, relations, and they used to get foreign contribution and they used to get material. So to avoid all such things, they have given some conditions. Fees for prior permission is 5,000 paid through payment gateway specified central government. Fees for regular registration is 10,000 paid through payment gateway. Rule 9A newly inserted. In application for obtaining prior permission, if the value of FC is over and above 1 crore, the government may permit such installments as it may deem fit. That means they may give permission when your application is above 1 crore. If the donor has given you commitment letter that I will give you 2 crores, you do these things over a period of 3 years. When you apply, that time government, since your application is above 1 crore, they may put restrictions saying that no, you should receive this not in one shot, but in installments. This is what it says. If application is obtained for permission, if the value of FC is over 1 crore, the government may permit such installments as it may deem fit. Subject condition that the second and subsequent installment will be released after submission of the proof of utilization of 75% of the FC received in previous installment and after field inquiry of the utilization of the foreign contribution. That means they do all the things, whether you have done properly or not, after confirming all the things only, they give permission for the second installment, third installment. That means this is like a monitoring, half-yearly test, final exam, something of that kind. When lapsed, a fresh online application can be made only after 6 months. A separate bank account will be opened exclusively for receiving FC money. These are all blood and mercy. Once again, it's repeating. When one or more bank accounts are opened in one or more branches for the purpose of utilizing, intimation electronically online. See, sometimes when they apply, I have not received permission, I have not received permission, they say. No, permission is different, intimation is different. Here it says intimation. Once you have done, new bank account is open for utilizing, you simply intimate that it's over. Don't wait for any permission, not necessary. It's their work. Like doctrine of indoor management we have. So we need not look into that and say why they are not done, why they are not said. No, only intimation. So in FC Act, you have to be very careful which form is for intimation, which form is for permission. It's very important. Same rule applies to person seeking prior permission. No second application within a period of 6 months. You have submitted online application, thinking that, oh, whether it has reached or not, let me do once again, one more online application. No, they say once you are done, you have to wait for 6 months. If no response comes, then only you make one more online application. So in between, nothing. You have to keep quiet. No second application within a period of 6 months after submitting an application. Fees for permission is 5,000. Fees for general registration is 10,000 through electronic. Fees can be raised with central government. Rule 10 deals about validity of certificate. It is for 5 years. Deals about maintenance of accounts. They shall maintain a separate set of books of accounts and records exclusively for foreign contributions received and section. Rule 12 deals about renewal of registration certificates. After 5 years only you can renew. Application form FC3C to be made in 6 months before the date of expiry. These are all procedures. Application for renewal to be accompanied by a fees of 50 through online electronic gateway. If failed to apply, shall be deemed to have been seized from the date of completion of the period of 5 years and the date of grant of registration. If you have forgotten when you are in work, when it is lapsed, after 5 years it gets lapsed. But there must be some exception, no? So they say, if seized, a fresh request for grant of registration may be made to the central government. It should provide sufficient grounds in writing explaining the reason for not submitting. Then the application may be accepted for consideration along with the fees, and such application should be within 4 months after the expiry of the original certificate of registration. Rule 13 deals with the FC is exceeding 1 crore. When you have received about more than 1 crore, it shall place audited finance statements of FC funds consisting of receipts and payments account, income and expense account, balance sheet within 9 months on the close of the financial year on its official website or on the website as specified by the central government. That is before 31st December. There are cases when people went to the last moment, 11:30, 11:45 they started putting. Night 12 o'clock, few seconds or the screen went off. It amounts to non-submission. So no question of waiting in this case. You cannot take a chance. You have to be careful. Fourteen deals about utilization when registration gets suspended. When prior approval of the central government, up to 25% of the unutilized amount may be spent for the declared aims and objects for which FC was received. This is dealing about utilization when registration gets suspended. But you have a lot of money in the bank. How to deal? It says with the prior approval of the central government, up to 25% whatever you have, in that 25% of the unutilized amount may be spent for the declared aims and objects for which FC was used. But remaining 75% shall be utilized only after revocation of suspension of the certificate. That means it will be frozen, it will be the same bank account at the same time. Rule 15 deals about custody of FC amount whose certificate has been cancelled. When certificate gets cancelled, I have 1 crore rupees, still yet to be implemented program. Then what happens to that money here? Every person who has been granted registration certificate may make an application in electorate form in FC7 for surrender of certificate of registration on terms of section 14 there. The balance in FC bank account shall vest with the banking authority concerned till central government issues further direction. That will be the same bank, same amount, but it will be frozen. You are not allowed to operate. If the balance in the bank account is transferred to same above rule will apply to the person who owns it. Suppose we come to know and immediately we take up the money and transfer the other. The same rule holds good to that bank account also. So we can't be smart. If the balance in bank account is transferred, the same above rule will apply to the person to whom the fund has been transferred. So rule 16 deals about reporting of FC amount by banks. Within 48 hours, that is 2 days, every bank shall send a report of any FC transaction, there is a receipt of remittance, by any person who is required to obtain a certificate of registration or prior provision, but who has not been granted such certificate or permission. So the bankers have been made as a custodian. Such report shall contain certain required details, whether registered or not, and such report shall give certain details. Rule 17 deals about intimation of FC amount by the recipient. Submitted digitally signed or digitally signed report electronically online in form FC4 to accompany financial statements of every financial year beginning with first day of April. It should reach within 9 months of the closure of the financial year, that is December, to be sent to the Secretary to the Government of India, Ministry of Finance, New Delhi. Form FC4 to reflect FC received in exclusive bank account and also to include the details of funds transferred to other bank accounts for utilization. The above report shall be duly certified with the charter operator. Where no foreign contribution is received or not utilized, no need to enclose certificate by charter operator and receipts and payments account, income statement and balance sheet. Every form FC4 shall be accompanied by a copy of statement of account from the bank where exclusive foreign contribution account is maintained duly certified to the bank officer. It was there in the skeleton, again better now it has been. The accounting statement shall be preserved for a period of 6 years. In FC, 6 years, in income tax, 10 years. The accounting statement shall be preserved for a period of 6 years. Even if no foreign contribution is received during the year, a nil report shall be furnished. But no need for CS certificate, result payments, income to balance sheet. Rule 17, changes in name, address, aims and objects are key members of the association. All these are forms. We should intimate in electronic form within 45 days of any change. These are all different forms. FC1, FC2, FC3, A, B, C. The purposes, no? Everything. These are all the lists of forms to be submitted. Now you have to understand once again the design of bookkeeping. With this explanation, you should be able to understand there should separate FC section, non-FC section. it will come to the overhead tank in Delhi, from there it will go to the main cash book ledger, from there sectional books it will go. These are the, and in non-FC we have general accounts, provision account, agriculture, tailoring, whatever it is, they are all separate. Now, only this FC alone will go to home ministry, but both put together consolidated will go to income expenditure, balance sheet, recent payments, everything to general body, register of societies and income tax department. So FC alone will go there, but don't send the whole consolidated with local to the home ministry, only this much. Separate set of books amount, separate file statement, with local consolidated. Thank you very much. With this we come to an end. I don't know whether they are finished. Thank you very much. Thank you for the patient listening and for the opportunity given to explain all the things in this sessions. Hope everybody will be alert while doing this audits. And hereafterwards we are going to be very, very strict on this because of so many things happening around Pakistan border, Rajasthan, Pakistan, everything. Most of the things, terrorism are happening through foreign contribution they suspect. So they are going to be very, very strict on these things. So as an auditor, you have to be very, very vigilant. So thank you very much. Thank you, sir.
Very good evening to all of you. Pleasure to be back here. This is where the journey started for all of us. To be back in the branch is always a pleasure. I think today's session will be a bit unique because for once in the CA Institute I am representing the auditee and not the auditor. So I think that's a new thing from my side also, because I have also started by being an auditor, but now I have become more the auditee, although I do internal audits, more on the side of business, more on the other side of the table. So a very good prelude, I think, with Vittal sir talking a lot on the auditor's perspective, and he's given a very beautiful overview of the law and what needs to be done from an auditor standpoint. I'll try and complement that with what we can do on the other side of the table and how we can strengthen governance. Because it has also become imperative that the role of chartered accountants has shifted. We have shifted from traditional auditing into all these sorts of areas where we are actually supporting the business, and then these kind of aspects become very, very critical to us. So I have a set agenda for today. First of all, we'll start with what is the meaning of governance. What do we mean when we say that? We'll take an overview of what are the global benchmarks and frameworks that govern governance, aspects of governance. In the FCRA context, why is this so critical? Why is it so important? And then the relevant aspects of the FCRA law. It will be more of a revision session. I will skim through some of these aspects because sir has already covered it so beautifully. I don't want to repeat, but I'll just skim through the relevant portions. The Ministry of Home Affairs has released the do's and don'ts and major issues that they are noticing, and that's why they are rejecting these registrations. So we've spoken about that. I'll touch upon that in brief. And then what can be done from a board oversight and a leadership accountability standpoint? How can we strengthen compliance framework and internal controls? How can technology be leveraged? And at the end of the day, the eventual, end of all this is that one exam that everybody has to write, every institution has to write, which is the MHA audit. How do you handle an MHA audit? So that is where I will take you through this journey. When we are talking about board oversight and leadership accountability, I think I will also touch upon aspects where I have had the opportunity of being on that side of the table. I have had the opportunity of leading a foundation which was doing similar sort of work of receiving contributions and utilizing it for certain purposes in the Central and Southern Africa and headquartered in Mauritius. So some experience being on this side of the table as head of finance. I have been interacting with the board with the advisors. So some insight, whatever we learned as a part of that process also I will share. Without getting into too much of details, I will share that as well. So getting into this, what is governance? Governance in very simple terms is how an organization is run. As simple as that. It just means that how are the organizations going to be directed, how are they going to be held accountable, how are they going to be controlled. And there are certain pillars when it comes to governance which is effectively, transparency, accountability, fairness, and responsibility. So these are the 4 pillars on which a governance framework is always built upon. And when you look at any internationally recommended framework for governance, it will cover these aspects largely. So this is very critical to the organization. And basically, what is the essence of governance is a power. It's a power given to the board of directors or to the governing committee of the organization. How are they going to responsibly utilize this power? That is what is the core definition of governance. Many frameworks which effectively govern this, but I will only discuss a few of them which are more relevant. There is an ISO 37000 framework which talks about governance. Basically, it gives a guidance on what good governance is in organizations, and it defines governance in verbatim. Governance is the system by which the whole organization is directed, overseen, and held accountable to achieve its purpose. Now, this is common to any organization. I'm not saying this is only for FCRA regulated. This is a common definition of what governance is. So, what are the key aspects that the ISO 37000 defines when it comes to governance? It says there has to be long-term value creation. Very, very critical, and I will touch upon this in much more detail when we talk about board oversight as to how the board or how the governing members can ensure long-term value creation, which is something that needs to be the core of every organization. How do you do ethical and responsible decision making? Again, very key aspect. How is stakeholder trust? Now, stakeholder, when we say it can be anybody. In the FCRA context, it will be the donors, who will be the largest stakeholders in the organization, the beneficiaries. So, how is the stakeholder trust maintained? And how can we ensure the sustainable performance of any organization? So these are the key aspects. And then the ISO 37000 goes one step ahead and also defines what are the key principles in governance. And defines a whole host of it. I will not get into too much of detail around this because these are in essence individual topics in themselves, and we can talk hours and hours on these governance topics. But key principles need to establish what the purpose of the organization needs to be very clearly defined. How do you generate value again? Strategy and oversight, how is that, what is a good governance, what is strategy and oversight's impact on a good governance, that is also a key principle. How do you ensure accountability? How do you ensure stakeholder engagement? How do you keep them informed? How do you keep reaching out to them? How do you keep engaging them? That is also a key principle. Ethical behavior, again, ethics is very important, and when we come to FCRA in specific, I will also stress about why ethics becomes so very, very important. Risk governance, of course. Transparency, social and environmental responsibility, again very key. ESG is becoming a big ask today and globally recognized. A lot of policies, a lot of work around being environmentally and socially responsible, and become far more critical when we talk about FCRA regulated entities. So this is one of the international frameworks, ISO 37000, and principles can be used more or less for any sort of an organization. There is an organization of economic and cooperative development. It's basically an international organization or an intergovernmental organization. It has about 38 member countries. Basically, OECD's requirement is to ensure that there is responsible and fair reporting between, in any governance structure, in any accounting gap, you may call it whatever, in whatever terms, the OECD wants to ensure that there is responsible reporting. So OECD also gives certain principles on what governance is, and these are internationally recognized governance frameworks, and a lot of organizations use the OECD principles to guide their governance. One of the unique aspects of the OECD framework is that it focuses on distributing the rights and responsibilities among the stakeholders and also establishing the rules and procedures for decision making. Why very important to understand the rights and responsibilities among stakeholders? And one of the key principles actually, or the emphasis areas, it will talk about equitable treatment. That every stakeholder, irrespective of how much is their value, how much is their benefit, how much are they contributing, irrespective of that, everybody needs to be given an equitable treatment. And this is one of the core principles on which the OECD governance framework is structured. And there are other emphasis areas. It talks about protecting the rights, it talks about equitable treatment. Again, transparency and disclosure, you will see that repeating across frameworks. And what is the accountability of the board? And when you look at key principles in the OECD, again, more or less similar to the ISO 37000. But again, the very important point of the OECD framework is rights and equitable treatment of shareholders. That's a very key takeaway in OECD framework of governance. So these are international frameworks, ISO 37000 OECD framework, and many organizations across the globe use these principles to guide them. And coming to our very own land, we have got the Companies Act 2013 itself, which actually drives governance. It talks about how a board structure needs to be. What is independence? What are the mandatory disclosures? How do you ensure transparent accounting? How are your financial statements true and fair? That itself is a governance framework in itself. And it defines certain ways of achieving governance. There is compliance, there is again ethical responsibility, and stakeholder protection is also a part of. So this is the Companies Act, which is the Indian standards on governance, and these are basically the frameworks based on which you can govern the organization. Now, why does it become so important in FCRA? We're coming to the core of our topic today. Why is it important in this sector? FCRA, if you look at any entity that is registered, right, you can go to the online website of FCRA, you can put the state, you can put the year, you get an entire list of what are the approved organizations. These are largely in what? You will look at them that they will be in the education sector, social welfare, religion, culture. So basically, the essence of the FCRA regulated entities, why are these regulated? These are all for the upliftment of society. So it becomes far more, the responsibility of the governing members to uphold a very good governance framework. And what will good governance in this sector ensure? Proper utilization of foreign contributions, whether it is being received and used for the intended purposes. Very important, public trust and confidence, because these are organizations which have a long-lasting impact on society. The benefit is the members of the society. There needs to be a lot of public trust and confidence, which means governance becomes all the more important. The accountability to both the regulator, which is the Ministry of Home Affairs and the Government of India in this case, and to the beneficiaries, who are public at large. Transparency in managing the funds, because again, all this is bottling down to the benefit of the society, so very good transparency needs to be there. And a good governance framework in an FCRA regulated organization will ensure that the funds are received and utilized for the sole purpose for which they are received, and the organization is achieving the core objective for which it is incorporated. So in this sector, which is very, very sensitive as a sector, it becomes all the more critical that good governance is ensured. I will touch upon the critical aspects of the law. It is very similar to what Vittal sir has already taken you all through, so I will not repeat myself too much here. But a few aspects that are relevant to good governance, not from an auditor standpoint, but from an auditee standpoint, what the board of directors or the governing members need to know. From that perspective, I will talk about it. Foreign contribution, very simple. What is it defined as? Donation, delivery, transfer from a foreign source. And what does it need to be? It can be an article. Okay, it needs to be an article, but it should not be a personal gift. The personal gifts are exempted, but if it's beyond a certain value, even that is covered. Any currency, whether it is Indian or foreign, any currency is covered as a foreign contribution, or any security as defined by the SCRA or the FEMA. It defines, there is a certain definition of a security, so any security given also becomes foreign contribution. There are certain explanations. Pass-through contribution. So I receive it, I pass it on to somebody. I act as an intermediary. Even in that case, it becomes a foreign contribution. So pass-through contributions, if it is routed through multiple years, also becomes a definition of a foreign contribution. The FC receipt is invested in a fund in India, it earns some income, that also is treated as a foreign contribution. Very critical. You may say that, okay, it is out of invested funds, it is not from a foreign source. But this is foreign contribution received, invested. That money invested here, interest or any income is earned on that, that also is defined as a foreign contribution in the Act. But what is excluded here? In the due course of business. Now, for example, if I am a consultant rendering services abroad and I receive foreign currency in lieu of that service, that is not a foreign contribution, because that I am giving it in my professional capacity. Or let's say an education institution is running a course for foreign students and it receives a fee from the foreign student. That is in the normal course, so that is not considered a foreign contribution. So this section 2 of the Act defines this. What is foreign hospitality? Again, it defines a very unique term. We will not see this in any other law. It defines what a foreign hospitality is. Any offer, it should not be a casual offer. Your friend offering you a trip abroad does not become foreign hospitality. It's not a casual offer. But any other offer that is made in cash or in kind, which covers your abroad travel, and covers free boarding, lodging, transport, medical treatment. All this is considered foreign hospitality. The essence and the core of this is, let's say any government dignitary is going abroad and is receiving all this, it is to govern them, not for any casual offers that are made. But this is very critical, because then if people in key powers, or from a governance standpoint, let's say that any of the governing members are receiving this sort of a benefit from somebody or from somewhere, be very careful that this also will become a part of the FCRA compliance. So this is very critical to understand what the meaning of these terms are. And what constitutes a foreign source? Pretty simple for any foreign government agencies, international agencies, but the MHA also gives a complete whole host of exemptions. This is not coming under a foreign source. Any foreign companies or multinational companies, Indian companies which have more than 50% foreign shareholding, and what is that foreign shareholding? You have to again go back into FEMA and look at it. But FEMA also gives some exceptions. So if those exceptions are covered, it does not become a foreign source. Any foreign trade union, trust, foundation, societies, clubs, all this becomes a foreign source. And foreign citizens also become a foreign source. So very important is not just the organizations that are going to contribute, not just institutional investors, even individual contributors will also be covered under the FCRA. FCRA also talks about prohibiting certain contributions. I will not harp too much about it. Again, very sensitive topics. I will not talk too much about it. But basically, any politically connected person or anything that we are receiving for politicking in India, that is you cannot receive it. And it also residents in India or Indian citizens who are acting as intermediaries to sort of facilitate the transaction, that also you cannot. That is also prohibited very clearly in the Act. And most importantly, if the fund is received for a particular purpose, there is a clear prohibition. You cannot divert it for any other reason that you want it. But what is an exception to this? If you receive foreign contribution in these forms and features, it will not come under the FCRA. Let's say salary, wages, remuneration, you are receiving for the work that you are doing for a foreign organization, that is not covered. In the ordinary course of business, any trade that you do, like Sir beautifully mentioned, that will all come under the FEMA, because that is a trade activity. There is a quid pro quo. In all these transactions, you will see why there is an exemption, because there is a quid pro quo here. That is why it is not a foreign contribution. If you are acting as an agent for any foreign source, but the transaction is with the government of India, you are acting as a pure agent. In that case also it will not be covered. This Act does not apply. Giving gifts or present, let's say there is a delegation who comes, a foreign delegation who comes, and they are given certain gifts. A lot of this happens. You will be seeing a lot of dignitaries exchanging unique items of their countries. All this is not covered. If you receive any money from your relatives, of course, subject to certain limits, and for what purpose, that needs to be seen. But usually any gift that comes from your relative will not be covered in this. Or through official channels, if you are receiving it with some prior permission for some particular purpose which is not for charity, that also is not covered. And any scholarships, stipends, all this received by students here from any foreign source, that also is not covered. So, Section 4 clearly gives certain exceptions. Very important, I think, we touched upon this in the previous section also, there is a prohibition on transferring. Money received cannot be transferred to anybody. There are certain exceptions to it. You can transfer it to another organization which is registered for the purpose of FCRA. It is registered and governed by FCRA, and it is going to use it for some particular activity which is approved. Then the transfer can be made. Or if you have a prior approval for a certain purpose and you have taken the central government approval for it, then the transfer can happen. Otherwise, no question of any sort of a transfer of any FC that is received. And what is received has to be only used for intended purpose. Again, it's a repetition, but I am just refreshing. Cannot be used for any speculative business. And it can be used for administration of the institution or the foundation of the NGO or the NPO, but it can only be restricted to 20%. It was 50%, which is now then changed to 20%. Some of this I will skip. There is a government powers to prohibit. It talks about, the section 9 talks about what will the central government do. This is more from a rule standpoint. There is also a registration requirement. I think sir already touched upon that. But one thing that is very critical from a governance standpoint is this point, which is the receipt and accounting of foreign contributions. Foreign contributions has to be received through the designated account, which is State Bank of India, Delhi. It has to be received through that. From there, it can go into utilization. So the fund accounting, which we spoke about in the previous session, which sir has very well explained, that can be done. But all of this needs to be segregated. So if you are a foundation, which typically happens, a lot of these NPOs have a domestic receipt, have a foreign receipt. They have got domestic donors. That has to clearly be segregated. No question of any sort of even a grey area here. It has to be black and white. That needs to be segregated. There needs to be a clear line demarcated between the two. And on the other side, whatever you receive from a foreign contribution perspective needs to come in through SBI, then distributed to utilization accounts, and then from there utilized for intended purpose. So this section becomes very critical from a governance structures perspective, because the board governing members have to ensure that this is very clearly driven and the objects are met and the money is received, earmarked, moved. So this becomes a very critical governance point, and that's why from a legal perspective it's very important for anybody, either the auditor or the auditor, to know this. Section 18 talks about intimation, that you have to intimate to the government once you have received the money. Again, a lot of this is procedural, so I will not spend too much time on it. I want to move to the core topic of today's discussion. There's a section on maintenance of accounts. We have covered this in the previous as well, so I will not again repeat. There is an audit that the government can do, either if you have not intimated the receipt within a prescribed time, or once intimated, they find something is fishy about it, they can always come back. And the authorized officers are allowed to inspect the premises, search, seizure, all that provisions will apply. One thing is very critical here, which is we were having this discussion over the break as well. The MHA's audit findings are confidential. They do not share. So which means that you will never have a public record of why there is some foundation got an audit, what happened to that, why were they blacklisted. All this is kept very, very confidential because of the very sensitive nature of this industry. So it's very critical for every governing member or for good governance to always be aware of all the aspects of the law, because you are not going to have any sort of data available like in other organizations. You can fetch an audit report, you can fetch good accounting policies, you can see what's happening. All that is going to be very restricted here, because all this is very, very confidentially and very well controlled. So it's very important for the governing members to be well aware of how to run this sort of an organization. So somebody who's been running trade, a CEO who's been running a very successful trade, need not be a successful lead or a CEO or a CFO of this sort of an organization. It's a very, very different skill set. It needs to have a very different thinking as well. Again, political, I will not talk too much about it, but there is a section that says if the candidate is up for election. So typically what happens, and this is why this point is a bit critical, usually in these sort of organizations, because you are dealing with public welfare and all this, the ability of that person to switch from this side to the election side, very, very possible, because you have access, you know the people, you know the society, you are always, obviously you have, some of you may have a very good name, so the leading members may think, okay, let me go and stand for an election. If that is going to happen, the whole fabric of the foundation or the NPO, which is governed in this act, is going to be broken, because then you have to go intimate that you are going to stand for election, and then the whole process of approvals, all this is going to then start. And very important, the candidate needs to clearly then demarcate what money he received for the election, what money was received into the foundation for some other activity. It needs to be very, very clearly demarcated, very sensitive matter in this sort of a sector. Now, let's say this happens that the candidate has gone for election, it becomes a political party, you cannot receive money, so you cease to exist as a registered organization, or you have to, let's say, surrender the organization itself, you have to close it because of all these issues. Then there is a law that governs the assets. Again, very important, a lot of these NPOs, NGOs, foundations create a lot of significant assets which will in turn help them achieve their objectives. So when this sort of a thing, when the NPO ceases to exist, it's very important for the governing members to understand what needs to be done with these assets, how do they need to be disposed of, and there is a clear guideline for this. So this is very important for the board or the governing members to know that if your organization is going to cease to exist, what do you need to do with the assets. Section 39 talks about offences by companies. Like any other organization, the moment there is an offence, corporate will is lifted, and the directors, everybody becomes responsible. So if there is an offence, it is very important. That is why governance becomes so important. The moment something goes wrong, no question of somebody saying, I am only the director, I am only the CEO, I am only the CFO, I don't know, I did not perpetrate. No question. Corporate will automatically is cut. Like in any other section, here also it is done. And here it is far worse, because this section is very, very highly regulated and it is a very sensitive sector. So it's very important. So when we are looking at all this, governance becomes a very important point to be kept in mind. There are some documents required for registration, very procedural. I am simply going to skip over these parts because we've spoken about it in the previous session. There is a form FC3A for registration. If you want to go for prior permission, there is a 3B. And there are certain conditions for prior permission. If you have not completed the 3-year period, or you are taking money from a specified or a flagged party, and also there are certain, or the NGOs. There's also a very nice, exception. It says if your NPO, NGO is of a political nature but not a political party. If it is of a political nature but not a political party, so there is a very grey area there. In that case, you have to take a prior permission, because you need to be very clear with the government that you may be of political nature but you are not a political party, so you have to intimate, get the confirmation from the government, and then you can receive the money and run your organization. So there are certain aspects that require a prior permission and certain documents that need to go here. Very important, there needs to be a commitment letter from the donor. This is very critical from a government standpoint. The donor is going to give a commitment letter that I am going to give money for this purpose. And when you file the form with the MHA saying that I am going to take the money for this purpose, that amount, purpose should match with what the donor is saying. So that is very critical to ensure when prior permission is being obtained. And of course, there is a concept of renewal now, because after 5 years, the government is saying you have to renew. In the case of prior permission, they have made it 3 years. So at the time of renewal also, some documents need to be given. I will talk a little about this. This is important. So the MHA, if you go to the FCRA website and you go to useful links, you will see that the MHA themselves are giving a do and a don't. And I will talk about the critical do's and don'ts. They have got a list. I will talk about what the do's and don'ts are. And the MHA has also published, after a lot of hue and cry, that okay, you are rejecting these registrations left, right, center, you are not giving us a reason. The MHA went out and put out a list also and said, this is why I am rejecting, and they gave certain reasons for it. That is very critical to understand. So what is the critical do's that the MHA says? It says, apply for registration, be compliant, apply for the registration. If you need prior permission, get the prior permission. This is a mandatory do. You have to use designated account. Don't go and take money into some other account. You cannot live like this. You have to take it into designated account only. FC3 needs to be submitted properly. It needs to be submitted promptly. It needs to be submitted. Even if you receive funds, don't receive funds, whatever it is, that needs to be submitted annually. Accurate record needs to be kept. So receipts, what you received, how you utilized it, what are the assets you created, and whatever certificate needs to be taken from chartered accountant, from the auditors, that needs to be on record. 20% administrative cap is being looked at very, very closely by the MHA, and it's also one of the main reasons for rejection of renewal also. You will see that in the later slides. That 20% administrative cap, that you receive the foreign contribution, but you're going to use it for administrative purpose because you have to run the organization. You can do it subject to that 20% clause. That needs to be very strictly adhered to, and funds need to only be used for the declared purposes. No question of thinking about it here, this way, that way. And no demarcation, so clear demarcation between domestic and international. There is no question of merging the two. These are the do's. It is also talking about don'ts. First it said take registration, the don't it's saying without a registration do not accept fund. Very clear. Big no from the MHA. You cannot transfer the funds into some organization. You have got a sister concern, I have got 10 other foundations that I am doing business with, they are also in similar activity, I will go try and give them, no questions. No transfer unless there is a prior approval. Filings, very important, easily gets missed. Oh, but I am doing all these activities, I missed it, I forgot. No question. They're saying you cannot neglect these filings. And no misuse of funds without a proper documentation approval, nothing doing. So these are the clear don'ts. 4 pillars, like they have said these are the don'ts. You cannot do this. No questions, you cannot do any of this, no exceptions also here. And then the MHA put out a list. Everybody was asking, you are rejecting, why are you rejecting, what are you thinking? MHA had to come out and clarify. They said, look, I have got valid reasons for rejecting it, so I will give you the reasons also, and they have given the reason. One of the biggest reason they are saying for not giving renewals is, you guys took a registration, very happily you took it, I gave it to you very happily, you have not filed anything. So I will not consider you for renewal, because you are not filing, you are not intimating. This is a clear violation. Lot of cases there was misutilization of funds. I took the money, but I gave it to somebody else, I gave it to some other fund, I tried to do something else, I tried to do some other activity, I am doing it for the good. No, but you are receiving it for a certain purpose, needs to be utilized for that purpose. No question of them misutilizing this money. Again, inconsistent documentation. We spoke about fund accounting, very important that we need to maintain this fund accounting. A lot of organizations not maintaining it. Everything is merged, everything is meshed. They don't have a proper governance structure, they don't have proper audits happening. So that's another major reason. Very important, they said a lot of people are breaching this 20%. So I will not renew, because you are supposed to only utilize it up to the extent of 20%. Now you have violated, so I will not renew. Or the other major reason as well, that they are operating without a proper permission. So the MHA has come out, and on the face of it, right, when you look at the do's and don'ts, if for me or for anybody else, when you read the do's and don'ts, it looks very simple. Yeah, this is basic. No, everybody has to do it. What is so great about it? But people are not doing it. Very clear that the do's and don'ts are not being adhered to. That's why the MHA is putting out this list and saying, look, You're not doing all this. So that's why I'm not, giving you the registration or the renewal. So very critical to understand these legal aspects. But now we have spoken about all this legal. I've only done a revision of what we discussed in the previous session. But now the point is, what do we do? That is very important. So now I'm going to talk from the organization side. As a person who is leading the organization, I served as a head of finance. What I did, what the members of the board did, what the advisors did, and how did it help? That is what we're going to talk about, and how. So what is critical for us here as chartered accountants? What can we do? A lot of you may in turn become the chief financial officers or the chief compliance officers of these sort of organizations. When that is happening, these are good, some sort of a flow chart, or you can have this in your mind to say that this is how you need to approach a good governance framework. So that's why we are talking about this today, purely now from the other side of the table. And not as auditors, but as the auditee themselves. I think very important in my experience and what I have seen, what I have observed as well, one thing that is easily forgotten when it comes to a charitable organization or an NPO or an NGO is to create value. Because when you talk about charitable organization, it is a common belief, and a lot of chartered accountants don't get involved in this sort of sector. Why? There is always a common belief that if I give any services for a charitable contribution, it's charity. They will not give me fees. This is a very common misconception that is there. But being on this side of the table, a lot of value creation can be done, and value generation can be done, and that is a core feature of a good governing body. How can you ensure good governance? You have to create value. And how do you create value? You ensure that the contributions that are received are being used for the core objective of why you have formed the organization. The mission is very clearly defined, the vision is clearly defined, and when the money is received, it needs to go into this vision and mission. You need to ensure that the objectives are being upheld. Approve and monitor. This is again how you give value. You approve that the fund disbursement is going for the relevant purposes, and you monitor the utilization of those funds. That is also very important. And not just for trading organizations, it is very important to set KPIs even for a non-profit, an NGO or a foundation which is doing charitable activity. Extremely important for the governing members to set KPIs for every member. Any activity that is done has to be measurable. If it is not quantifiable, it cannot work. If any activity is being done, a KPI needs to be set for it. If you are talking about, let's say, in the health sector or the religious sector or in the education sector, that I have received money for this particular purpose, and I need to achieve, let's say, what can be a good KPI? I need to transform the lives of, let's say, 2,000 children in terms of education with the money I receive. This can be a simple example of a KPI. But every activity, every disbursement needs to be linked to a KPI. This is something that a lot of foundations ignore. Because they believe, okay, the money is coming in, we are doing something very generic on a large level, we are doing what we are intended to do. But am I even measuring whether I have got the money, whether I have got the money for it, whether I have spent it or not? Am I really ensuring it? That is largely missing. And this is also very important for the donors. The donors need to know they have given the money, they will want to see some measurable impact. It could be a CSR money, they are not going to want the money back, but they want to see that the money that they are giving is being put to good use. So it becomes very important for a good governing body or for the board of directors or for the governing members to set measurable KPIs and keep monitoring it. This is something that goes easily missed in this sort of an organization. The other aspect of a good governance is, of course, giving proper strategy and oversight. This is common to any organization, nothing new that, for this sector is nothing new about it. Any good governance will have a proper strategy. It will ensure that the activities are aligned with, the core ethos of the organization, with the vision and mission alignment is happening. And there is a donor expectation that we are aligning to that donor expectation. There has to be a proper review and an approval mechanism. There needs to be proper oversight. And of course, it's also important to establish a lot of subcommittees. Again, in these sort of organizations, this is very easily missed. In these sort of organizations, the CEO will be the CFO. He will be running the fund, he will be running the activities, he will be receiving the money, he will be accounting for the money. There is no subcommittees, no oversight. So there is clearly a clear gap of segregation of duties. All these aspects, commonly we think, okay, in a trading organization, in a for-profit organization, these are important. In a not-for-profit, it is also important. In fact, it's even more important in not-for-profit organizations that you have specialized people doing specialized services and specialized committees overseeing that the alignment with the strategy and the vision and mission of the organization is being upheld. It's very important to have subcommittees, and this is also a very, very key important aspect of a good governance. One of the core pillars, we saw it in the ISO 37000, we saw it in the OECD framework, we saw it in the Companies Act, accountability. Accountability is very, very important. Why so much more in FCRA organizations? I again come back and I'll keep repeating this point throughout this session. These organizations are for the benefit of the larger society. It's very important that every rupee you have to be accountable, not just to the stakeholders of the organization, not to the donor, not to the internal people, but to the public at large. This is a very, very large responsibility. It's as important as a chartered accountant who's signing a balance sheet that is on a listed, if you're doing a listed company's audit, you take a lot of responsibility, right? You have to ensure that you're accountable because your financials are going to be relied on every retail investor out in the market. Like that, every good governing committee, especially in FCRA-related organizations, should be accountable to the public at large. It's very, very important to establish this as a core ethos of an FCRA-regulated entity. So clearly, how do you ensure accountability? Good checks and balances. There needs to be proper internal audits. There needs to be proper external audits. We should be engaging the Chartered Accountant Committee to come audit and to give us more value. That needs to happen. Good governance will think like this. And there needs to be a proper reporting. There needs to be transparent, true, fair reporting that happens on a periodic basis. Compliance needs to be properly adhered to. All these whole host of sections that talk about the entire chapter that talks about accounting, bookkeeping, maintenance, the board needs to be on top of it, that this is my compliance, this is what I need to do, and they need to be ensuring that this is done. This will ensure proper accountability. Clear roles and responsibilities need to be defined, that this committee will do this job, they will add value, this person will do reporting. So very clear roles and responsibilities need to be defined to ensure that all the activities, especially in terms of compliance, reporting, accounting, is properly done. And wherever there's a delay, wherever there's a non-compliance, inadvertent non-compliance, not advertent. If you're intentional, that's a different topic altogether. Inadvertent compliances, inadvertent delays needs to be properly addressed and transparently addressed. What can a good governing member do if there is an internal audit exercise happening or there is an external audit exercise happening? Inadvertent delays that you have noticed need to be very upfront and transparent. This is the problem. Can you now give me a solution? How can you help me? That strengthens accountability in these sort of organizations. If you look to hide and do all sorts of stuff, that is where the problem starts. That is where accountability fails. Now, what is very important, this is personally what I have experienced as well in my roles in the past, stakeholder engagement. It becomes extremely critical. And for an FCRA regulated entity, your two biggest stakeholders are your donors and your beneficiaries. Your two biggest stakeholders in the organization. Everybody else, regulator is also a stakeholder, the government entity is also a stakeholder, but that is all in the second line, I would say. The first two people are your donors and your beneficiaries. What can you do to ensure trust, first of all, needs to be built? A proper, engaging with them properly and saying that this is what I have done, this is what I have done with your money, these are the activities that I have done. These sort of things really help, and one thing that we have really found is simple aspects, right, like newsletters, sending them regularly updates. That to your donors, that we received your money, we did this activity, we told you that we will do this, we have done this, we have not been able to do this for XYZ reasons, and we will be doing this in the next quarter or the next few months. This sort of a reporting, open, honest reporting with the donors has really extremely helped. And certain specific instances, keeping confidentiality in mind, because I'm also bound by an NDA, I will try and talk about a few of these matters, but this goes a very, very long way with donors. Whether it can be a CSR donor, a corporate donor, it can be some foundation that is donating money, it can be the governments of other countries that are giving money. It goes a long way if you engage with them on a regular basis and keep reporting to them what is happening. Similarly to the beneficiaries as well. Public reporting, that is a very responsible, right? In a listed entity, you are forced as a board to be accountable to the public at large. Everything is open to public eye, everything is open to public scrutiny. Like for example, any politician today, their personal life also is open to public, and they have to uphold a lot of, that's a great responsibility. Equally for an FCRA regulated entity, because you're serving society at large, it's extremely critical that you are open and you are in a position to clearly quantify and report as to what you're doing. If that is being done to the beneficiaries at large, that we are doing this activity, this is how you're benefiting, it again goes a very, very long way. These are real fundamental pillars of a good governance framework, and this goes a long way in helping and building trust of a particular foundation. So this is extremely important. Again, having a proper grievance redressal, a lot of organizations fail in doing this, a lot of good governance framework fail in doing this. when you don't have a proper redressal mechanism, if you're close to feedback, you're not going to listen to anything or anybody, you're not going to listen to criticism, then you're closing the doors. A good governing body is always open to feedback, is always open to having a proper redressal mechanism, and they will address every problem, every complaint that comes. This is extremely important, and when we say stakeholder engagement, this also includes the internal people of the organization as well. So it is very important to engage with them on a periodic basis. One thing that's again very important in this sort of organization is ethics. We talk a lot, right? Professional ethics. We're all bound by we're bound by the SCM primarily, or if you're a member of any other organization, you're bound by certain ethics. This is also very important to the board, to the governing committee. You need to first of all, if you are a good governing committee, you will first of all have a code of ethics. It needs to be a documented code of ethics. It's not that, okay, ethical behavior, ethics, values, very loosely defined by a lot of people, right? You may think it is ethical, but it may not be. So it is very important to first of all have a proper written code of ethics. And when that code of ethics is written, it's also important to communicate it to all the employees. Communicate that you have a code of ethics to all your stakeholders. And then hold regular training mechanisms with your employees, with the relevant consultants, that this is my code of ethics. I will have to uphold these ethics. Very critical to do this sort of a training activity, and be very open that this is my code of ethics. A good governing body will have an open code of ethics. They will be in a position to publish their code of ethics to their internal people or to external people, to external auditors, and say, this is my code of ethics and I am in a position to uphold this. This goes a long way in building credibility in these sort of organizations. And of course, when you put a code of ethics, in the FCRA regulated space, one thing that you will have to clearly mention is, I will not do any prohibited activity. That's a given. But it's very good to have all of this documented, given to your employees, given to the relevant stakeholders, and regular training on these code of ethics needs to be done. Very other important matter is the code of ethics needs to be updated as well. What is ethical 50 years back is not ethical today. Or what is ethical today may not be ethical tomorrow. It is a moving society, right? What we had, our value systems 2-3 generations back, and our value systems today are different. The ethical fabric, the moral fabric of the country changes, of the place that you are operating in changes. It also needs update. You can't just copy paste an ethical code of some 100-year-old organization and say that was a good ethics, so I will copy and paste it in today's world. It is not possible. This needs to be again and again revisited on a periodical basis. Ethics needs to be defined, ethics needs to be updated as well. It is very critical to do this sort of activity when it comes to a good governance. A very important aspect which goes easily ignored is risk governance. Every organization is open to risk. If you are a trading or a for-profit organization, of course you are open to all sorts of risks. Similarly, even a FCRA regulated entity, an NPO, NGO can be open to risk. Now, what are the risks? It can be a financial risk. What is the biggest financial risk? You're running out of money. It's the biggest financial risk. You need to know. Donors may not come back. If you have got a big activity and you planned something, let's say you started an activity thinking that you will do it for the next 5 years, but the donor gave you money for 2 years and said, you do this and then I will give you the next set of money. And if you're not going to deliver on it, that becomes a big financial risk. You're not going to have money. How are you going to run your organization? There are operational risks. What are the operational risks? That you have set certain deadlines, achievements, KPIs, and that not being achieved is a big operational risk. So this needs to be defined. And reputational risks. Tomorrow, if there is some accusation, especially in today's world where all of us live, unfortunately, a life in which privacy is a myth, it is very important to ensure that our reputation is upholded. So for a good governance framework, they will also be looking at what is the potential reputational risk, and what is the reputational risk, with whom are you associating with. If you are having a certain activity and somebody is endorsing your activity, who is that person, what is his reputation, all this needs to be seen. These are all reputational risks, the people that you associate with. It's also very important, that's why you have a very good auditor also. It's very important to have a good auditor, because that auditor can uphold your reputation or can damage your reputation also. Very critical. These aspects needs to be identified. And once identified, we identify it and then we forget about it. That's not the way. You need to maintain a risk register. A lot of organizations, forget not-for-profit. For-profit organizations don't do all this. Not-for-profit, it is important. For profit also is very important. But even for-profit organizations don't do this sort of a risk register. It seems very simple, but it's very important for us to make a list of what risks can we be faced with in the near future, and then that needs to be reviewed also. You don't prepare a risk register that becomes stale. That is also again useless. A risk register needs to be updated every time. For example, what is a classic example of a risk register? The recent example that I will take is the tariff. big risk. The moment the tariff announcement was going to come, it damaged a lot of organizations, a lot of clients. All these are big risks and they need to be reviewed every year. So if you're going to talk about some risk register that was maintained 10 years back when the organization was opened and you're going to keep the same risk register today, it's irrelevant. This needs to be reviewed every quarter and this needs to be updated, and there has to be somebody who's taking responsibility. These are my risks, this is my risk register, and how am I faring with this? That needs to be always evaluated. So I'm just giving one example. What is one sort of a risk that needs to always be seen? Every time a foreign contribution is received, the purpose, how is it received, how is it utilized? This needs to be very clearly, there needs to be a clear process for it. This is a risk, because if you don't do it, you are risking huge non-compliance. So this is a risk, and how do you address that risk? You put it in a risk register, you ensure that there is a certain process to govern it. So this is one of the examples of how risk governance can be done. And very important, when there is going to be a regulatory audit or an investigation, and there's always potential for something to be uncovered, there needs to be a crisis management also. Every organization, when it's updating its risk register, also needs to have a crisis management in place. Now these, from the wordings of it, or when you read about it in plain writing, seems very, very simple. You say, okay, what is the big fun in this? But a lot of organizations suffer in doing this. And risk, in essence, is a completely independent discipline of itself. There are a lot of there's risk certifications. You can be a chief, there are so many certified risk management programs that are done. You can be a risk officer also, and somebody who upholds and manages this sort of a risk. It's very, very critical for organizations to have a proper risk governance. And this is the responsibility of the governing committee. What else can the governing committee do? Again, very important, we saw it in both the ISO 37000, we saw it in the OECD, transparency. Transparency is a core, key, fundamental principle of good governance. What can you do to ensure transparency? Publish your reports to the relevant stakeholders at every given point of time, have proper utilization certificates, ensure that your returns are being filed on time, have a proper communication policy. When the government is going to approach you, be open to communication, be open to responding to them, don't try to hide, don't try to manage the conversations, there's no question of that. Be open to your auditors, be open to your employees, be open to feedback. So these are very good aspects of a good governance or a good board of a given organization. Very important in transparency, all of this will be there in for-profit organizations as a related party. A lot of you, when you're doing audits, will be certifying related party transactions done at arm's length and all this. It's very important for a good governing body to have a proper register that these are my related transactions, this is what I have done, this is where there is a conflict of interest. It's very important to transparently disclose all this. So these are certain key principles of transparency. One thing that has become very important in today's world is social and environmental responsibility. This has become a big topic. You must be reading a lot of ESG and all this. Climate change is real, whether we want to accept it or not. There is an environmental responsibility for everybody. So every organization, irrespective of the nature of the organization, where it is, and especially for organizations which are involved in the welfare of public, need to be socially and environmentally responsible. And how do you do that? You always prioritize any projects, any activities that have a long-term impact. Nothing in the short term, because then this would have certain adverse implications. Always think of the long term, always think about what it is going to do in the long run. That is very important, to prioritize long-term impact. That is how you are socially responsible. You have to always assess environmental sustainability. Your activity may be benefiting 10 people, but maybe coming at the cost of 100 people's environment. So it's very important to be environmentally responsible. And you should also always ensure that whatever activities are done are not harmful to either society, which is social responsibility, nor to the environment, which is environmental responsibility. And now you may think, how do we achieve this? There are certain frameworks for this. The United Nations has got a sustainable development goal. It's a list of about 17 goals where they talk about how you can be socially and environmentally responsible. These can be an example of a guiding governance to a board or to a governing committee, that I can adopt these kind of goals to be socially and environmentally responsible. So this is also a very critical aspect of a good board. This has become very important now. Social and environmental responsibility is the next big, very important thing, especially for FCR regulated organizations who are going to serve society at large. We spoke about one of the key principles of the OECD framework, which was the rights and equitable treatment of the shareholders. So this OECD holds very responsibly, and this becomes the core responsibility of the governing committee, that you always ensure that every member, irrespective of how small or how big he is, his or her interests are protected. This is very important to ensure that all the members, irrespective of what they have contributed, all donors for example, irrespective of the amount of contribution, they are being given the reports, they are being given access to whatever information that they need to be given access to, and they are treated the same. A donor comes in with $1 million, you will treat him differently. Somebody comes in with $50,000, you will treat him differently. It does not work. There needs to be equitable treatment to all stakeholders, and that is the responsibility of the board, because it is in the nature of a person to be biased. Bias is a given, but a board, a good governing committee will ensure that bias does not enter into or affect the rights of any stakeholder. It's a very important principle that a good governing body needs to uphold. So we spoke about all of this as to how a board can be very good, and I will just very briefly run you through a journey of what happened when I was on this side of the table trying to address external auditors. In fact, when I joined the organization, there was nothing in place, right? They were looking at receiving some money, they were doing some small activities, they had one corporate donor. That money was used to come in, and this was not FCI regulated, this was based in Central and Southern Africa. And they had money coming in from Middle East, Mauritius and all these places. They had corporate ownerships. And these guys used to maintain, they used to do certain activities, but otherwise nothing in place. I was roped in to sort of give them an accounting framework. That was all done. But the wake-up call for all of us, in fact, even I was not very aware of these matters, the wake-up call for us was when a major fund from the United Kingdom came and said, I want to contribute a substantial amount of money for the betterment of XYZ activities, and can you give us certain policies? Do you have an internal audit framework? Do you have, what is your code of ethics? Do you have an anti-bribery policy in your organization? All these questions came as a big surprise to us. And we always thought, this organization was run by the who's who in this field. They have done all sorts of activities, big time social impact guys. Driving it, I was the only person coming from a non-social background, I was coming from a for-profit background. And all of this was a big wake-up call. That was when the day started. We said, we will write SOPs. We will put these policies in place and we will bring a good governance. And one of the key people who led this entire transformation for all of us, where I learned a lot, was a board who was like a strategic advisor. We had an advisory committee, again with the biggest names in the non-profit space, who had done major organizations, who had led major organizations, who had received funds, done a lot of social impact. So these guys helped us, guide the whole framework for how we can set it up. And the whole journey of this particular transaction led to us receiving money from a very, very big donor, which was the US state. So this was an entire journey that we had to follow. None of us knew the definition, none of us knew the G of governance at that point of time. And then we had to go through a whole host of all these matters, and that's when the importance of that board, not just having importance of people who can drive social impact. All of us in that organization, everybody could drive social impact. Perfect people for it. I could drive finance. I knew how to handle money, working capital management. All this comes core to us. We have read all this, right? This is our core skill set. What we did not know was what is the definition of a good governance. So we went through this whole host of journey, and whatever I have shared with you are big time learnings from that particular journey, especially everything related to risk governance and transparency that we spoke about. It was a big matter. That is when we realized that inadvertently, not out of any intentional default, even to our corporate donors, who was the biggest donor and running the whole foundation, we were not giving open feedback to them. We were not giving them a clear picture of what we were spending the money on. It was only when they came back and said, why do we need more money? Is when we realized, we had not been open with them. But we had a genuine reason for it, and we were able to secure more money in the coming years. But this sort of a transparency with every donor, and very important to have a risk governance framework. This is a journey that I personally underwent, and that is why I am in a position today to share that these are extremely critical aspects of a good governance. And as I think as a chartered accountant community, all of us are torchbearers of a good ethical business practice. And we are not just auditors, we are not just here to sign financial statements, we go far beyond that. Our professional capabilities are far beyond that. It is our job, when we are consulting with any organization, especially in this space where there is so much of social impact being driven, that they are taught how good governance is being done. A lot of the people who run these sort of organizations are extremely talented, skilled people who can bring a lot of social impact, but are not good governance leaders. It's our responsibility as a community when we are on that side of the table, as an auditor, it need not be on just on the organization side. Even as an auditor, it's very important that these aspects of a good governance are very clearly articulated when you are auditing or consulting and advising these organizations. So it's also important to have a proper compliance framework and internal controls. I am a core business process guy and a controls guy, so this is again core to my skill set. It's very important to have compliance framework and internal controls. And what does this do? Internal controls will ensure financial integrity. You have a very robust internal control system which could include, let's say, delegation of authorities, segregation of duties, who's going to receive the money, who's going to account for the money, how are we going to spend the money, how are we going to account for the money that we are spending. All this will bring about a lot of financial integrity. Compliance officers are very important for accountability to the regulators and for oversight. Any standard operating practices will bring a lot of process discipline, and the compliance calendar is very important. A lot of us do not, even I feel on a regular perspective, compliance calendars, all of us know the due dates. But do we know at what point of time the information needs to come for us to meet the due date? That we are not tracking. We all know the due date. ITR due date is 15th of September, we all know. But if the client is going to give data on 14th September also, we are accepting and doing the filing. We don't have a compliance calendar that says, okay, I need this period of time to comply with this. This is the information I need. This is what I need to do. This is the time frame I need to do it. And by this time I need to receive the information. This is what a compliance calendar will talk about. Otherwise, everybody understands a compliance calendar is put a list of due dates. That's not a compliance calendar. A compliance calendar will say when I need to receive the data, when I need to receive the inputs, what do I need to do, who are the list of people that I need to talk to, what is the time frame I need for it, so that I can go and achieve compliance. Filing the return and meeting the due date is the last step in a compliance calendar. That is the last column. There are going to be so many columns within that. It's very important to maintain this sort of a compliance calendar. So in specific, you have to go a bit deep. Some very, very simple examples I am giving. How can we have internal controls? Simple example of an internal control is you ensure that there is a segregation of FCRA or FC and non-FC or international and domestic funds. Have a simple segregation. That is an internal control. This will ensure financial integrity. Have a maker and checker. Delegation of authority. Have a maker and checker. Who's the organization hierarchy? Who's going to make it? Who's going to approve it? There are simple internal controls that you can have. And audit trails, having proper audit trails for every document, from where did it originate, who approved it, who authorized it, all these sort of trails that we have to maintain. These are all a part of internal control. This will ensure financial integrity. I am just giving very, very simple broad level examples. Otherwise, each of these topics we can talk about it very much in detail. What can a compliance officer do? This is very important. A compliance officer can be a consultant, can be in-house. Very important to interpret the FCRA rules. It is very important. It's a changing act. It's going to go through so much of changes. There's so much of scrutiny today. You need a compliance officer. Otherwise, how is it going to survive? Vittal sir is here with us today talking about the law, and somebody like that is required in the organization. Somebody needs to understand what are the exceptions, what are the prohibitions, what is accepted, what is not accepted. It's very important to have a compliance officer like that. Otherwise, how will you keep up? To track the deadlines, because these deadlines, a lot of procedures. If you look at the FCRA Act, I think the Act is so much, rules are so much more. So it's very important to have a proper understanding of the procedural aspect and the deadlines for it. So that is why a compliance officer becomes very critical. Or this is how you can ensure compliance. Having SOPs again, SOPs are very important to ensure that internal controls are being met, right? You need to have a proper process defined for how do you receive money, how do you spend it, how do you take assets, how do you account for the assets. And first of all, are the staff aware of what they need to do? Is every team aware of what it needs to do? Is there proper oversight? This all forms a part of an SOP. And always again, it will be my suggestion, and I feel what has worked and what will work is to have written SOPs in place. So a lot of organizations have understood SOPs. There is when you do a knowledge transfer, somebody is leaving the organization and he is going to replace somebody else, they will do an unofficial knowledge KT. 3-4 days they will tell them, this is what you need to do, this is how you need to do it. But that's not the way it works. This becomes a very person-dependent organization. It needs to be a process-dependent organization or a person-independent organization. Whether that person is there tomorrow or not, the process needs to run. Very important to have documented SOPs. And of course, a compliance calendar, like I spoke about it. Track what are the key obligations that we need to do. Track what is it that we need to achieve that compliance. Who are the relevant people. When do I need to send alerts to them. When do I need to receive information. So it's very important to have a compliance calendar. Something that's very important, and one of, I think, the more or less towards the end of this session is tech. Now, all of us are living in the age of data, AI. This is the age of tech. So it's very important to have a proper tech tools and support in the organization. Otherwise, manually, the volume of transactions, it's very difficult for us to be able to do it without proper tech. So for good governance, what can technology do? So the situation today, the government is 3 steps ahead of us. They are using big data analytics today. Classic example, all of us are in the IT filing season. The annual information statement, the EIS, PIS, is such a classic example of how government is leveraging big data. They are in a position to tell you, probably I had so many, my partners handle all this IT, they have had clients who come and told them, how do you know that I have got this income? Government knows. Even the assessee also doesn't know that he has that income. The government knows. The government is employing big data analytics. So if you need to be ahead of the government, you need to also be employing technology as in the organization. So technology can be a big governance enabler. Otherwise, the government is always going to be 2 steps ahead. And what can technology do? It will provide better tools. You can automate compliance. You can strengthen oversight. So these are some simple aspects. But exactly what you can do, I will take you through a few slides where exactly what can be done. One example is to use cloud computing, right? A lot of us use, especially if it's an organization having multi-city, multi-state presence, it's very important to use cloud-based systems to have a real-time tracking. Today, especially if you've got an organization, let's say you've received money to a designated account and you've moved it into 4 or 5 utilization accounts which are in different states, and each account, if you have to close and consolidate your position and file, you need to have a real-time tracking of what's happening with the money. Otherwise, the report is going to be, today, it is very important in decision making to have proper data. Otherwise, if you're going to have one branch is going to give you information today, other branch is going to give it to you after 20 days, it is stale. And data stale is a useless data today in today's world. So it's very important to have real-time fund tracking, especially if you have multi-locations and you have moved your money into multiple utilization accounts. It's very important to have a proper cloud computing framework. Any software it can be. A lot of us have been using Tally for ages together. Tally also is now on cloud. So anything, it needs to have a proper real-time tracking. They have to be automated compliance calendars. Gone are the days when we are going to keep a manual track, we are going to remember that this is going to be a deadline. All this is now today not possible because there are so many changing regulations. It's always important to have an automated compliance calendar that will be tracking this information, updating it so you are on top of what is happening in terms of the regulation. Otherwise, this is an ever-changing law. If you're going the manual way, it is not going to work. Very important to have proper dashboards for the board. Good governance needs to have information. Otherwise, how are they going to govern the organization? It's very important to have dashboards. And especially, I have found this very useful in this sort of a space. A lot of the people that you deal with in this space are non-finance people. They are not finance people. They are people who drive social impact. They don't understand. We understand balance sheet, P&L, income and expenditure account, receipts and payments account. We understand how this works. A lot of people don't understand. So, you need to have proper dashboards which will have clear reporting metrics and clear data and understandable data. So it needs to have financial information for non-finance people. That is very important. So these dashboards become very critical, and today multitude of ERP systems or online systems available to do all this. And obviously having any sort of a technology or a cloud-based system or any sort of an online system eliminates the manual errors that can happen. How can we use data analytics? Again, we are living in an AI-driven world. One thing that is very important or very good to use is any sort of an AI platform that can always run into your data and try and detect all these propensity for fraud, red flags, flag off what is a high risk, a medium risk and a low risk. So AI can be used to do that. And for fund utilization, for defining, so we spoke about initially that for value creation you need to define a KPI. KPI definition is easy. You have to also measure the KPI. For that measurement, it is very important that proper data analytic tools are available and these are leveraged very well to be in a position to give proper and real-time reporting as well. It is possible to do data analytics without proper technology as well. You can do it manually, but then by the time you do your data analytics, your report is stale. So it is important to use proper tech platforms, and there are again multitude of platforms available. Simple Excel, Copilot and Excel can do a lot. It is very important to have predictive analysis, especially when we talk about a risk register. When we are updating a risk register, to have predictive analysis for what's going to happen. That is also very important. Your data analytics can tell you that this is the past and this is where we see this happening and this is where we see this going. Historically Q3 has been bad. Historically this particular project has not been working well for us. These sort of analytics which can then tell you that you are stepping into a zone of risk can be very, very useful. And what is very important when you are very useful when you use data analytics is it's evidence driven. You're not going to, there's no scope of understanding interpretation. It's clear data, it's black and white, it will show you. It will not, usually people will tell you, data will show you. That is very important to have proper data analytics and AI in governance. Of course, it's also going to help transparency. Like I was saying, one thing that really worked for us is to give donors a very nice real-time visibility of the funds. Good frameworks, good data analytics, good platforms, and again, multitude of platforms available in a position to give proper dashboards, put it in a nice, easy, understandable way, present it to donors. All this sort of a thing tech can help. Otherwise, manual reporting and all this is going to take a lot of time and is not going to be in a position to capture all the information as well. It's always great, you can always use tech to come up with proper public dashboards which can show what is the impact that we have created, what is the impact that we have driven, what is the status of our activities today. So public dashboards beautifully can be made out of a good proper ERP system if you were to invest in one. One thing again that works in today's digital world is technology enabled stakeholder communication. We'll be sending email alerts, SMSs, digital newsletters that goes every month to all the stakeholders and says this is the impact that we drove this month, this is what we intend to do in the next few months. These kind of things go a long way in building trust and transparency in organizations. So tech is an unavoidable part of our lives, and even especially in this framework as well, in this space of FCRA regulated organizations, there is imperative to build transparency and public trust. It's very important that proper technology tools and platforms are utilized to be able to achieve this. Additionally, also a lot of the internal controls that we were talking about can easily be automated and achieved by using technology. Again, I'm not going to talk about too much, but let's say a very simple example, these e-audit trails, right, which will tell you when the entry was passed, when was this money received, when was this utilized, who approved it, who authorized it, all this sort of data easily if you have a proper ERP system. And I'm not talking about fancy, right? When I'm saying ERP, I'm not talking about the Oracles and the SAPs of the world. There are a lot of cloud-based platforms which are available today, which help you easily track these sort of KPIs and metrics, and also ensure internal control. So a simple, Tally, for example, Tally Prime Edit Log, simple platforms like Zoho, QuickBooks, all of this have these sort of features. So it's very important to use this so that your internal controls can also be automated. Otherwise, if you're living in the manual world, it's going to be tough. One thing from a technology standpoint that is extremely critical is cybersecurity. This space deals with a lot of sensitive public information. You're having a lot of information about your beneficiaries, about your donors, and this is very important that your data in your servers are very well protected. And I think this raises a very important question of how you're maintaining your data. Is it properly secured? Is it on a local server? Are you saving it on some other international server? If you are doing it, do you have the proper agreements to ensure that your data is not leaked? More than for trading organizations, what is the worst that can happen for a for-profit organization? A for-profit organization, your commercial data will get leaked. Here, this is sensitive data. This is a very, very sensitive organization, a very sensitive space. You're talking about beneficiaries who could be very, very common people, and you're going to hold on a lot of their data, their KYCs, and all this is going to be held with you. A lot of information that's going into this sort of a space. It's very important that these organizations today, from a good governance standpoint, focus on cybersecurity. It seems a very large topic to a lot of us. Cybersecurity is, we remember our ISCA paper in CA final or the DISA, CISA. It's not that, right? It's very important. These are basic stuff that an organization, especially in the public welfare space, needs to have. Data is very, very secure. It's very, very sensitive. It needs to be properly protected. Please, every organization I would always impress upon, regular security audit needs to be done of the space. You need to understand what framework, where are you storing your data, who has access to it, access control metrics for internal employees, who has access to what. These sort of simple checklists and frameworks are very important for a proper good governance framework. And the last aspect of what I will discuss is at the end of the day, all of us have to write this exam. It's called an MHA audit. You have to write that exam, right? You have to pass the exam. How do you pass an MHA audit? And how will a good governance help you handle an MHA audit? What can a good governance do? A good governance can ensure that you can maintain accurate, properly organized, segregated, clear, and up-to-date data. A good governance will ensure that you have everything up-to-date and properly organized. This can easily help you handle a MHA audit. What you need to do, you need to actively engage with auditors. Auditors are again the torchbearers of this compliance. You need to actively engage with them. Look at what certifications they have done. Have they flagged off any non-compliances? Have you addressed those non-compliances? If there is inadequate compliance, have you disclosed it openly to your auditors? Have they suggested a way out? What have they written in their certifications? To having a proper understanding with the auditor will help. When the MHA comes, they're going to read that audit report, they're going to rely on it. If you even don't know as a governing member, if you don't know what's written in that audit report, then how are you going to handle an MHA scrutiny? Right? It's very important for a good governance framework to actively engage with the auditors and understand what is it that they have certified. Need to keep proper resolutions, approvals and utilization certificates, all this needs to be readily available. Resolutions, even in Companies Act also, it is sometimes missed. And these organizations, it cannot be missed. If you have taken a decision, you have taken a resolution, verbal, whatever it is, needs to be documented. There should be proper record that on this date we took this decision, this is what happened. Very important for good governance. Every decision needs to be documented and there needs to be a proper trail for it. Very important for these organizations. Like I was again going back to the discussion, one of the first questions that we got from one of the donors was, do you have an internal audit today? We said, oh no, but we do not have an internal audit department at all today, right? Because why internal audit for an organization which is in the not-for-profit space? Why do you need internal audit? That is when they were very clear. How else will you uphold good governance and how else will you hold compliance? It's not just the profits that you are making. That's not what we are looking at. We are looking at how compliant you are, whether you are actually doing the activities that you are meant to do. So it's very important for a good governance framework to have a proper internal audit mechanism and have mock inspections. Prepare. This is crisis preparedness. You be prepared for when an MHA audit comes. What is it that you need to do? How do you need to prepare for it? Who's going to be the person who's going to be the single point of contact for this? All this is very important to have this periodic internal audits and mock inspections. Very important, especially in this space, you're not dealing with a tax officer here. You're dealing with the Ministry of Home Affairs. It is a very sensitive matter. You're dealing with a regulator who is upholding national interest. It's very important to train everybody handling an MHA audit to be open and transparent. No question of managing here. There is no question of managing these audits. Oh, I will manage the audit. Nothing about it. Very sensitive. We need to be very clear. Inspections factually have to be answered. Whatever is there needs to be openly told. There needs to be proper transparency and there needs to be open communication. That is a very important training that a good governance framework will do for all its staff. And of course, be very transparent, provide the right evidence, timely information. All this is anyways a given. And it's a very good idea to designate a compliance officer. If you are in for an inspection, either it's an internal officer or either is it going to be, let's say, an external consultant, whatever it could be, it's very good. It's a good idea to have a proper compliance officer who can help you navigate through the complexities of the Act, handle the complexities of how the MHA is going to approach. It's a good idea to have a compliance officer as well. So from a governance standpoint, these are the best suggested ways. I mean, there could be a lot more. This is from what I could think of, that these are, most critical aspects, I would say, but there can be a lot of other smaller aspects, and it will be a different viewpoint as to how to handle this. But a good governance framework would at the very least address these points when it comes to an MHA scrutiny. If you were to do this, if you have a good governance, you will be in a position to pass this exam with flying colours. So I will end with saying that governance is trust in action. It is built on compliance, it is built on accountability, and it is built on transparency. It's very, very important to uphold a good governance framework. So while, from an auditor standpoint, you must have all understood the Act, you have understood what needs to be done. Whatever I have said today in this second session has been from an auditee standpoint, and how a good governance framework can help very skillfully handle this very, very sensitive Act and a very sensitive space in which these organizations operate. These organizations going forward are going to form, or in fact even redefine the fabric of our country, because they are hitting the critical areas: health, education, social welfare, religion. These can really shape and make the fabric of the country itself. And there's a lot of inflow of foreign money that is coming in the current ecosystem. That is why the government also is putting so much of a scrutiny on it. The Act has gone through so many phases. We spoke about that in this previous session. And you see the number of amendments that have come in the last 3-4 years, the procedures that have come in the last 3-4 years. It's very clear. Although the MHA does not release public information of how much money came in all this, they don't release this information very easily. But the way that they are navigating it is very clear that this sector has become very critical for the country. So it's very important as chartered accountants that we are in a position to advise not just how to pass an audit, but how to uphold the good values of governance. I really thank the branch for giving me this opportunity, and I should definitely thank Vittal sir because a person following here, a person of his seniority and his experience is a very difficult task to do. I hope I have managed to do at least half a good job as he did, and in a position to at least give you the other side of the table as to what we can do, and I have shared my experience as well as to how a good governance framework helped me, in handling this sort of an organization. So I hope all of you are taking away some thoughts at least from this session, and thank you so much for giving such a patient ear. Thank you.
Vittal sir, may I request you to open my eyes? Thank you both the speakers, Mr. Arvind and Mr. Vittal sir. So may I request the chairman to please hand over the memento to the speakers. Thank you both the speakers. I think so the members have really benefited out of your experience. Right? Thank you members. And Shishankar, you can give the CP list to them.